and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Of our members, being prepared won't be a new thing. And it won't be their first experience with social distancing. Overcoming challenges is what defines the military community. USAA has been standing with them for nearly 100 years, and we'll be here to serve you for 100 more.
People tell you not to panic when the market goes wild, but it's human nature. What you should not do is let it impact your investment decisions. Easier said than done, right? Well, here's what you can do to get your emotions in check before you do something rash. Take a few deep breaths. It really does help combat stress. Consult with a financial expert if you can. You'll get a reality check and put time between your impulse and your actions.
Welcome back to Squawk Box this morning. Many small businesses have shut their doors, but the bills are still piling up. The Small Business Administration launching a program to try to assist, but many lenders are now voicing their own concerns and doubts, calling the SBA's expectations unrealistic. Joining us right now to talk about is Huntley Garriott. He's the president of Live Oak Bank. Live Oak Bank is the largest SBA lender by lending volume in the country. We appreciate you joining us, Huntley. Tell us about how this program is or is not going to work, because we're hearing from so many small businesses and also lenders that say that they're either not going to participate, at least today, and the question is when.
Good morning. The administration's had a really challenging, to get this right, and they've done an incredible job over the last couple of weeks trying to put a plan in place that gets money to small businesses first and foremost, but balances the need for speed. As businesses that are shut are, obviously struggling every day with the administration and the policy demands around fraud and making sure they get this right. And by having the banks administer this, it does have a massive distribution network in place. But the SBA programs, do have certain policies and rules that have to be, sort of followed. And so getting those rules and that policy set, I think we got all the rules we needed last night, the final application. And so, the banking industry is hitting the ground running this morning.
Well, so what is your expectation about the banking industry hitting the ground running this morning? Because there is a sense among some of the bigger banks, biggest banks, I know you've worked with the SBA for a long time, a lot of the other banks have not, about how quickly they're actually going to be able to onboard people, especially those who haven't historically had an account in certain cases at a particular bank.
Right. So the KYC and know your customer requirements are very real. And so for a bank with existing customers, that will be, an easier lift than it will be to reach out to new customers. And as you said, we've been in the SBA business and very active in it. So we feel really comfortable with the program and the rules, and different banks are going to have to react to that and figure out, be comfortable with the documentation, be comfortable with the calculation of payroll, the calculation of forgiveness that's going to come, and then ultimately the government guarantee that stands behind that loan.
So just on a very practical basis, you get these guidelines last night. You said that you guys are up and running today. For what you know about the rest of the industry and just how quickly and how easily or difficult, challenging it might be for them in terms of days, I hope not weeks, Is your expectation that some of the big banks that aren't necessarily on board this morning will be so by Monday?
So I think the administration did a really good job of simplifying the rules. And I think that once people, kind of get their arms around that, the amount of documentation is pretty minimal. Once you get the requirements around the payroll calculation figured out, that can happen pretty efficiently with the right documentation to verify. And I expect that by the first part of next week, you're going to see banks, working to make these loans pretty quickly.
But just walk through some of the practical implications for small businesses out there. If you are a small business owner today, you own a restaurant or even a mid-sized business, you should do what? You should be calling your banker and asking for what?
Yeah, so, I think small businesses are making tough choices every day as it relates to, employees, as it relates to rent, as it relates to utilities, all sorts of, decisions that they have to make around conserving cash and weathering this storm. I think for a lot of small businesses, this is a very good program. 2.5 months of payroll is the loan amount of monthly payroll is the loan amount, and over an 8-week period, you test. The amount of payroll that you've paid out, plus you have a basket of about 25% of that money to pay off other things like rent and utilities, and that loan can be forgiven if you can document that you spent that money. So for a lot of businesses, this will be a very, very good program, and they should be talking to their bank.
Huntley, let me ask you a question. If you run a retail operation of some sort and your expectation is that you may not be back to 100% or even 50% in 3 months from now, and you're saying to yourself, do I want to keep these people, meaning my employees, on board? Do I want to furlough them? Can I bring them back? But I don't think my business is necessarily going to come back as quickly as you might need to make the loan work properly. What is the bank saying on the other end of that?
Yeah, we've been talking to all of our existing customers and fielding a lot of inbounds. It really is a case-by-case basis. There's no perfect answer for whether or not you're better off, with this program and retain those employees. We've heard some small businesses say, gosh, if I can do that, I'll have them work on my store and my restaurant, and we'll, do some, minor construction work, things like that. We've had others that have really said, look, it just doesn't make sense for me. I don't believe I can put people back on the payroll that quickly, or whether it makes sense or not. I need money for utilities. I need money for rent. I need money to pay my mortgage. And that's a harder conversation, because if it's not forgiven, then this does turn into a loan. And again, in some cases, that loan may be valuable for a customer too, but it really is a case-by-case decision. And we've been talking to all of our customers and others that have been calling us trying to help with that advice.
Huntley, we appreciate your time. We wish you lots of luck over the next couple of days and weeks getting that money out to small businesses that need it. Appreciate it.
Thank you.
All right, coming up, Mohamed El-Erian will join us. He originally warned not to buy the coronavirus dip. Tune in for his thoughts as we get ready for the weekend. Stick around. We'll be right back.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wins.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Inwashable. Order at WeatherTech.com and stay safe.
Hello, darling.
Oh, this is nice. Your house is almost on fire.
I think I found your wallet.
This was on your driveway.
I got some of your mail.
We're here to make sure you're okay.
Oh, thanks, Mike.
All right, thank you, my brother. I appreciate you.
Do you think he's ready for a debit card?
Mm-hmm.
He's on a roll.
Mm-hmm.
The Greenlight app and debit card makes it easy to manage your kids' money and brings you peace of mind.
He has to do it.
Mm-hmm.
With Greenlight, kids form smart money habits that prepare them for their futures. Did you know about this?
Mm-hmm.
Thank you. Greenlight, all the tools you need to raise financially smart kids.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Investors bracing for the monthly jobs report. What you need to know coming up. Plus, the small business lending program will be running today, but will it work? We'll speak to an insurance expert about loans and what businesses can do to stay afloat. And Wall Street's set to end the week on a sour note as the number of global COVID-19 cases surges past 1 million. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan this morning. Let's take a quick look at U.S. equity futures at this hour, show you where things stand on this Friday ahead of the jobs number. That jobs number, of course, not necessarily representative of where we really are, but Dow looks like it would open down about 229 points after a good day yesterday, in part because of some comments the president made to Joe Kernan later on Twitter about the idea that potentially something may or may not happen with the price of oil and what the Saudis and Russians may do. That helped push prices in the stock market, equities and oil higher. We'll see whether something happens. S&P 500 looking to open down about 23 points. NASDAQ down about 70 points. Joe.
Yep, we're going to talk a lot more about that now. In fact, we'll start with Eamon. A group of energy executives are set to meet with President Trump today to discuss the big drop in the price of crude, what can be done about it. Eamon Jevers joins us now with more. Good morning, Eamon.
Yeah, good morning, Joe. We expect that meeting at the White House at 3 p.m. this afternoon, East Coast time, so watch for that. Meanwhile, as Andrew was just saying, the president told you, Joe, directly first that he had secured some kind of a commitment here from Russia and Saudi Arabia, and that there was an agreement to lower the production of oil, which had an immediate impact in oil markets. The president said that again last night, suggesting that there were specific figures thrown out by the two countries in terms of their commitment here. Here's what he said in the briefing room yesterday.
Russia talked about 10 million barrels. Russia and Saudi Arabia are fighting over this, and as everybody knows, it's really killing an industry, hurting Russia badly, hurting Saudi Arabia badly. It may be 10, and it may be more than that. I was actually told it may be 10. As I told somebody before, it may be 10, and it may be more than that. Maybe it's 15.
But the Russians in particular disputed that there had been any agreement between them and Saudi Arabia and sort of downplayed the idea that there was anything happening here very much at all. Now, we do know that those oil executives are going to be going to the White House this afternoon. And we have a sense here from talking to some industry players about what's going to be on the agenda. Take a look at what they've told me so far about what the expectation is. One of the concerns among some of the big players in the industry is this idea that the president might impose tariffs tariffs on Saudi oil. A lot of the big players, including API, are arguing that tariffs are a bad thing and we need to protect the global supply coming into the United States. They're also going to talk about royalty and leasing relief for drilling on federal lands. We expect some conversations about storing excess oil reserves in the SPR, the Strategic Petroleum Reserve. The Department of Energy is already examining that, and the idea of Jones Act waivers could come up in this conversation as well. That's the rule that requires you, if you're shipping within U.S. ports, to have American ships and American crews. That drives up some of the expenses there. The industry has long angled to get waivers on the Jones Act, so we can expect them to make that push again today as well. But the big question here is whether or not they can come to any agreement. Harold Hamm is going to be one of the players in the room, and an interesting one, because while some of the big producers are going to be arguing against tariffs, it's expected that Harold Hamm, who's a billionaire and a close personal friend of the president's, will be arguing for those tariffs and arguing that the American shale and fracking industry really needs that kind of price support. And the big guys suggest that Hamm is one of those producers who can't really make money at this low price and needs those tariffs in order to get the price up to where he thinks it ought to be. And also, there's some sense here that he's in ideological agreement with the president on the idea of tariffs in general. So a fascinating meeting set to take place at the White House this afternoon at 3 p.m., guys.
Yeah. You know what, Eamon? We may not be talking about COVID. I mean, just for a brief respite, talking about oil is like, I almost welcome it anyway. Thank you, Eamon. Joining us now, Mike Summers, CEO of the American Petroleum Institute. He's going to be at the White House meeting. Mike, let's start here. I know that 10 million that's a big number, and you'd need a lot of cooperation. You might even need some cooperation with domestic producers. Do you think that the rest of the oil producers would demand something in return from the United States to get to that number of 10 or 15 million barrels a day?
It is a very big number, and I do think OPEC, Saudi Arabia, Russia probably could not do it alone. I mean, if you look at what world demand is right now, we're anticipating in the month of April, it's going to be about 80 million barrels a day. That's down from about 100 million barrels a day. So what we're dealing with now is really a demand crisis on top of a supply crisis. But about 80% of this, in our estimates, is really a demand problem because of the coronavirus.
Okay, so there are articles being written now, and I'm just going to quote one of them here. President Trump is now seen, and I think CNBC wrote this, seen as a moderator in the world oil talks, as he's going to meet with these CEOs today. And yesterday he said he spoke to MBS, spoke to Putin. Is he the moderator? Will he be effective? Can he extract things that, I mean, he may use a little arm twisting too, I would imagine, with the Saudis at least. Will he be successful at putting something together?
Look, we are very encouraged by what the president has been doing. We think he's in the right place right now. He's working with the Saudis. He's working with the Russians. And I think that there's great unity in this industry, that it's important that we work with our allies to make sure that these markets are well balanced. But at the same time, we also have to remember that the supply issue is one problem, but the biggest issue is demand. And until we get through the coronavirus crisis, I think we're in for a prolonged downturn within these markets.
You think that the urgency of the situation in terms of where prices are could get these disparate entities that don't get along a lot of times? And I mean, it's hard to imagine that, but could you see them come together to try to support something that's in the common interest at this point? And could we get to 10? Yes. We just heard 15. Is that possible? Yeah, I think we've seen, they said maybe 6.
I think what you're seeing here is that no one's benefiting from prices at this level. The Saudis aren't benefiting. The Russians aren't benefiting. So I think what you're seeing here is people acting within their common interest, that we have to get these markets rebalanced. And the best way to do it is for production to come down in the short term. But I think the key point here is that, American producers, we're not operating within a dictatorship. We don't have the ability for, one person to come in and say that the price should be X. So at this point, we're working within a free market system within the United States, not in a dictatorship that can demand what a certain price of oil should be.
All right, Mike, you're the president of the API. I guess maybe we should get Kilduff or something. You can't comment on whether, if you see the market yesterday jump like that, biggest one-day gain ever, and then you see all the skepticism that the numbers are greeted with by a lot of people in the business. Why did the market? Do you have an opinion why the market didn't back off, or why it seems to be counting on this or believing in this, at least at this point? Do you figure something's going to happen?
I do. I mean, I do think we take the president at his word that he's had great conversations with both the Saudis and the Russians. And I do expect that there's going to be action as a consequence of that. And the United States, of course, has great leverage, particularly with Saudi Arabia. So we're very encouraged by what the president is doing. And I think we're excited to hear more about those conversations at our 3:00 meeting today.
Yeah. All right. Thank you, Mike Summers. We appreciate it. That's what I was thinking yesterday, Andrew. It's like, let's see, do I need two sources for attribution? And I was saying, wait a second. I think it was like the guy himself just told me. So, what am I going to do? Let's go with it. I don't even need someone saying White House sources or anything. So there we are. And there we have it, as you say, once in a while.
There we do. We'll see what happens. When we come back, a lot more on Squawk Box. As businesses close, many are finding that the pandemic isn't covered in their insurance policies. So they're turning to regulators and policymakers for help. That story when we return on Squawk Box. But before that, let's take a quick check on the futures right now. We are in the red across the board, 213 points down on the Dow. S&P 500 off about 21 points after a green day yesterday. And we get the jobs number, of course, at 8:30 this morning. Squawk returns in a moment.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Course and continue to adapt.
Getting you the story.
And delivering the facts.
Speaking directly to the newsmakers
on the front line of this fight.
The world has changed, but our commitment remains the same.
To keep you informed.
Stay safe.
We're all in this together. Together.
Personal Capital wants to know, do you have a plan for your finances?
I have a plan for retirement.
For college savings.
For investing.
I can see all of my accounts and my investments.
All my investments and more in one place.
I feel good about my finances. Finally.
Download the free Personal Capital app today. You can feel good about your finances, and Personal Capital is here to help. Visit personalcapital.com today.
We are KiwiCo, and we deliver hands-on STEM projects designed to inspire young innovators. Kids of all ages can explore science, engineering, art, and more. Get your first month free. Visit trykiwico.com.
My favorite thing about banking with Chime is getting my paycheck up to 2 days early, which is really cool because I walk into the office and I'm already boasting that I got paid. My name is Dulce, and I love banking with Chime.
Get paid up to 2 days early. Chime.com.
Welcome back, everybody. As business owners shut their door, many are finding that their insurance plans don't cover pandemics. Right now, regulators and lawmakers are stepping in to try and help Americans get the cash that they need to survive. But it is creating all kinds of problems and raising risks for the insurance industry, too. Joining us right now to chat about the insurance industry is Eric Donalo. He's the chair of the insurance regulatory practice at Debevoise and Plimpton. He also is the former New York State insurance superintendent. He was there during the financial crisis, and we talked to him pretty frequently during that because that was kind of front and center for what was happening during the financial crisis. Eric, it's good to see you today. Thank you for joining us.
Thank you.
This is really turning out to be a big mess.
Yeah, this is what we've talked about before. It's the expectation gap between the policyholders and the insurance companies. And obviously, policyholders are now scrambling around trying to understand what kind of coverage they have. And generally, business interruption insurance requires some kind of direct physical damage to the property. And even if you get over that hump and say that the virus is really like a physical manifestation, many of these policies have pretty strong exclusions for pandemic, epidemic, and viral causations. And now people are starting to look at I don't think we talked about this last time, but there's another form of insurance in these commercial policies called civil authority insurance, which is where the state comes in and says you can't enter your premises or a business. Say there's been a gas leak or an explosion on the block and they close down the whole block and your business or your home is there. It's by civil authority. And there are policies that have civil authority insurance, which is arguably more akin to what we're going through now with all the state and city orders and federal orders, but that also may have exclusions for pandemic and epidemic.
I try and weigh through this because it's a big morass. I can understand a business owner thinking, hey, I thought I had insurance for business interruption for something like this. Maybe they have a valid point to say, I thought this was covered, but I can also understand the insurance companies saying, wait a second, we wrote premiums based on the idea that we weren't covering this. If we had been covering this, we would have had to charge you a lot more for insurance along the way. As a former regulator, how do you come down on this?
So I tend to come down on the insurance side, not because I'm just instinctively pro-insurance, but the pricing would have been just tremendous. This is a very, very expensive form of insurance if it doesn't have these exclusions. We see the reasons now. And many, many regulators were authorizing the exclusions. In other words, they knew about the exclusions. They supported the exclusions. I think there were even states where you were not even allowed to write business interruption insurance without the exclusions because the regulators didn't feel comfortable because of the risks towards solvency, et cetera. So it's not like I'm taking sides, but it seems to me pretty obvious that the insurance industry really, really thought this out, tried to be prudential about it. They're not trying to deny claims just to deny them. Their view is there really was never coverage for this, and there needs to be some other solution, some of which we've talked about before. But I think that that's sort of how, as I would view it as a former regulator. But then, as you know, there's legislatures out there, there's politicians that are seeking to pass and propose legislations that would retroactively undo the exclusions. And that's where you have tension between the regulators, the policymakers, the legislatures, the companies, and the insurance companies.
Well, that's a huge question, what legislators are now looking at. I know that's happening in the state of New Jersey, lots of other states, too. Yep. What would happen if some of those states were successful in retroactively saying, you never really wrote the policy to cover this, but you're responsible anyway because you've got the money? What happens at that point?
So what would happen? And there's different versions. I think there's an Ohio version, Massachusetts, New York, and New Jersey so far. But they all basically do what you just said. They maybe create some kind of fund, but the industry ultimately would pay for the fund. So I think what you end up with, frankly, is lawsuits, right? A lot of insurance companies will fight back and say that it's, frankly, a takings, it's unconstitutional. There's something in the Constitution called the Contracts Clause, which was a post-Revolutionary War clause to stop states and eventually the federal government from coming in and abrogating contracts without both parties agreeing to it. So there are even constitutional challenges to it. It would be a serious serious issue. And I think it would, and in some sense, I'm not sure it would be healthy in the sense that it would rattle the insurance industry. They would say, we did this as carefully as we could. You know, if you want to do a prospective fix, like, you know, they had to do with terrorism and the Terrorism Reinsurance Act of the federal government, you know, give us a backstop, give us a ceiling, and we're happy to walk in and write this insurance. But without that kind of an approach, they are very exposed if these states do this kind of rollback.
I actually wonder what it would mean for how many insurance companies would continue to write any sort of coverage for business in states that actually followed through with something like this.
Yeah, the New Jersey statute is interesting because it presupposes, it almost accepts the validity and the strength of the exclusions. It's not like a gray fight with them, a gray area fight. They really seem to, in their statute, just assume that they're there, assume they're impenetrable as an exclusion, but then just retroactively roll it off and say the insurers have to pay. Look, I'm very sensitive to the frustrations of people, and that's why I think when we first talked, I could see this expectation gap coming because, you know, exclusions and covered peril and all these technical terms are hard for the public to get their arms around. And I agree with what you kind of opened with. Probably people expected that this was what they had the insurance for. But this is also the kind of exposure that could really, really injure the insurance system if it's not managed carefully and that there's not some respect for the validity of the contracts.
But Eric, I do understand that perspective. Look, I paid for business interruption coverage. I've been paying my premiums on that. My business is interrupted. What do you mean I didn't read closely enough and didn't dig down on it?
Not exclusively, but in between the carrier, the insurance company, and the business owner, there's a broker. And that's why when you see the letters to Congress, a lot of them are also co-signed, promoted by the brokering industry, because many of the regulators, like New York, are saying in their frequently asked questions section on their website, they're saying, speak to your broker, see what your coverage is. They're acknowledging that there is an expert that's also involved here besides the insurance company and the commercial owner. But I understand I don't want to diminish the frustration at all, or in any way say that people are probably not disappointed and there is this expectation gap. But I think that one then has to sort of admit that we have a national issue on this. As I think I said previously, it feels like it needs a national solution, both retroactively and prospectively. Retroactively would be some kind of federal fund or something that would go to help these business owners and not disregard the contractual provisions of the insurers, and some kind of prospective relief, a la some kind of a solution so that the industry can start to write this again. Because I bet, I would predict that increasingly borrowers are going to face lenders and mortgagers who are going to require this kind of insurance. And then if the industry doesn't write it, you're going to have a real ding on commercial activity thereafter.
Right. It's kind of like being there for flood insurance after a hurricane or something. Eric, thank you very much. Really complicated situation, but we appreciate your walking us through it, and we will talk to you again soon.
Thank you for having me. Thank you.
Okay.
All right, coming up, charts you got to see to believe. We're going to talk about the week that was next. Futures right now are kind of static, about where we've seen for most of the pre-market session, down a little bit over 200 points. Stay tuned. You're watching Squawk Box on CNBC.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Extraordinary times, unprecedented coverage.
We are far from normal here for this market.
CNBC's Closing Bell. Breaking news, crucial moves in the final hour of trading. Today, 3 Eastern. Watch or listen live on the CNBC app.
Welcome back to Squawk Box this morning. I want to take a check on the markets right now with Dom Chu, who's at CNBC headquarters. He has charts that every investor should be looking at right about now. Dom.
All right. So Andrew, to your point here, the reason why is because we've had a very rocky week, and it looks like it's going to end on a down note. But we want to take a look at some of the leadership and laggards in the market so far on a 1 week basis to give you an idea of what's actually really moving this week thematically. We know with the spike in energy prices that the energy sector is the best performing one so far this week in the S&P 500. It's roughly up 7.5% at this point. Also, healthcare and consumer staples. Healthcare a key focus given all of the talk around what the healthcare industry is doing in response to COVID-19. That's going to be a key sector for a while. And then consumer staples on the defensive side of things. That gives you an idea of leadership, the laggards right now. It's interesting because it's also a mix of some of the more defensive names as markets have rallied back somewhat over the course of the last week or so. Real estate, though, getting hit hard as people start to factor in what's going to happen when people don't make their mortgage payments. If they don't, what happens to rent and lease payments on the commercial side? The financials off 5.5%, and utilities as a defensive sector down 4% as well. I want to key your attention to what's happening with financials, specifically the difference between long-term and short-term rates, the yield curve, whatever duration or tenor you want to look at. We're going to throw up the 2-year and 10-year spread, the difference between 10-year Treasury notes and 2-year notes, to give you an idea of what we're seeing. Remember, at one point earlier on last year, we got to below zero there. It's been roughly about 25 basis points, 0.25% at the highs throughout the course of the last year. At this point, back earlier this spring, we were up to 80 basis points or 0.8%, and we've kind of slid back down, as you can see here. So as financials, Becky, become a key focus given the small business lending efforts from the Treasury, those banks, again, fighting some headwinds with a flattening yield curve. This is not a great situation for banks. We'll see if that becomes a hot spot for the financial sector as well, Becky. Back over to you guys.
Hot spot, so to speak, right?
Yes, so to speak.
So to speak. Dom, thank you. It's good to see you. Folks, when we come back, we're going to take a check on what's moving in the pre-market. Plus, Mohamed El-Arian will join us to talk about today's jobs report and what investors should take away from the numbers. Squawk Box will be right back.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. It's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Bad news for the credit card companies, but it's great news for you. We're Credit Associates, and we're offering you free information on how to completely resolve your credit card debt with a monthly payment you can afford. To see how much you could save, call now. 1-800-933-4101. Don't declare bankruptcy. Don't consolidate. Give us 10 minutes and we could save you thousands. After all, we depend on your success and offer a guarantee so there's no risk to call. Credit Associates. Live better, debt-free. Find out how easy it is by calling now. For the secret the credit card companies don't want you to know, call Credit Associates now and see how much money you could save for free. Call 1-800-933-4101.
All right, welcome back to Squawk Boxing's special coverage of the markets and the coronavirus pandemic. If you're just waking up, futures indicated down about 200 and change, just about what we've seen static for most of the pre-market session this morning. Also, oil futures holding on to yesterday's gains, historic gains, and also adding another 10% so far this morning, on hope for some type of truce, I guess, between Russia and Saudi Arabia, as foreshadowed yesterday by President Trump. Becky.
By President Trump in his comments to you, we should add, Joe. Joining us right now to talk more about another wild week in the markets is Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, let's start by the news that Joe broke on our air yesterday, that President Trump said he had talked to MBS, that he had talked to Putin, and that he expected that there would be some sort of a cut in production coming out probably not only of those two countries, but potentially others in OPEC. That really drove oil prices through the roof, changed the equities picture at that point, too. How do you kind of follow along on this to do the play-by-play?
Well, first you mentioned 10 million barrels, which is a very significant number. It's about 10% of the total output. But the message to the market went beyond that. The message went to say, look, the swing producer is coming back on. This notion of OPEC plus is coming back on. Having said that, let's look at implementation, because it's clear that Saudi Arabia and Russia need not just agree on how they're going to divide this up, but also they need to agree how they're going to bring others in. So, that it's a good signal, but implementation is going to take a lot of negotiations behind closed doors.
So what do you think about the markets at this point? We go back to this idea that you told us on that original drop that you would not be buying the coronavirus dip at that point, that there were a lot of things that we had to maneuver. And obviously we're still seeing some of that. We got the jobless claims number yesterday, more than 6.6 million Americans filing for unemployment in the last week, on top of the 3.3 million from the week before. And then waiting for the jobless numbers today and continuing to watch the number of coronavirus cases reported around the globe climb every day. How do you look at all of those headlines, then figure out what to do with the markets?
So I think the first phase of the market was sharp down. The second phase that we entered a couple of weeks ago is volatility around this downward trend. And we're seeing this again this week. We've had a lot of volatility this week, but so far we're down 1%. If you include today, we'll be down 2% at the open. What I'm trying to capture here is that we are still on a downward trend, but it's less pronounced and it's more volatile. Why? First, that dropless claims number, Becky, is incredible. It's incredible. It shows you the size and speed of the hit to the labor market and therefore the global economy. We also are getting indications, as you reported earlier, that policies are difficult to implement. Getting cash out to small businesses is not as simple as simply signing a bill. And then we have the uncertainty I talked about. So if you put all these things together, I think we're going to continue for now in a downward trend, volatile, and markets are behaving well. If you look inside what Dom just showed us, actually markets are behaving well. And that's because most segments, not all, have become more liquid. We've dealt with the liquidity issue. We haven't dealt with the income issue, and we haven't dealt with the balance sheet issue.
So, Mohammed, a downward trend and more volatile, I mean, it still just begs the question that we're avoiding, and that is, does the downward trend take us past where the last downward move took us? And that's really what we need to know, because if not, there's, you're talking about another, I don't know how many percent, but if we go another 20 beyond the lows, that's something to really be concerned with. But you have just as good a chance right now, and maybe it's okay with you, but if it were to find, making this sloppy bottom that we're seeing, you could at least miss the first 5 or 10%. You could of a rebound that ends up being permanent by waiting for Godot for new lows. Maybe you're okay with that position. I would probably be okay with that position. Nobody can catch the exact bottom. So if you miss the first 5 or 10% in the rebound, are you okay with that? Do you have to be convinced that we've already bottomed?
So two things. First, you said we're forming a sloppy bottom. I didn't say that. I don't think we're forming a bottom yet. I think we are going down at a slower rate. So there's a very important distinction there. When are we going to start forming a bottom? When one of two things happen. Either we get a really sharp fall, or alternatively, we get good news on the medical side. And that good news is starting to happen, but hasn't reached critical mass. As to how you will feel, remember, I shared with you, Joe, this notion of regret minimization. There's so much we don't know, Joe. There's so much we don't know. This is unprecedented. That this is highly uncertain for investors. So you're likely to make a mistake. You don't want to make a mistake, but you're likely to make a mistake. And what every investor should ask themselves is, what mistake can I afford best? Mistake of being too early or mistake of being too late? And what mistake can I recover from easiest? So for me, it's very different than for other people. I think the average investor, the mistake they can't afford is to be wiped out. That's because if you're wiped out in a bankruptcy, it doesn't come back. Bankruptcies are capital destroying. So for them, I say, you know what? Wait a little bit. Yes, you may miss the first 5% up, but it's very hard to call. This is a medical issue. This is not a market issue, an economic issue, a financial issue. This is a medical issue.
Yeah, that was my point. Because back in the financial crisis, we went back and forth a lot, Mohammed, and you were looking at fundamentals back then, and as a result, probably never gave a strong buy signal that maybe you would have in hindsight at that point. And I'm not saying it's going to happen this time. I don't know what's going to happen this time. But my point is, you're saying err on the side of this conceivably getting a lot worse because of what we don't know, and don't worry about missing if we go up 5 or 10% and you miss that. You want to err on the side of not knowing what's coming, and that's my only point. But so give me an exact. You think we go? The ultimate low would be 50% below the highs now, or what do you think? Or you don't want to make an exact call?
Joe, I can't make, and I would argue no one can. I have been pushing hard against this false precision. We don't know the duration of this shock. We know it's severe, but we don't know the duration. We don't know what's coming next in policy. We don't know how the restart is. There's this notion out there, which I think is false, that we're just going to flick a switch and everything's going to come back on. That's not how modern interconnected economy that have suffered a sudden storm come back on. And we don't know how different the landscape is going to look. Until we price these things in, it's very hard. No, I would argue no one can tell you what the bottom is going to be and when it's going to occur. So you've got to look at this, be resilient, keep your options open, and have agility to move once you've got that information. But don't move too early. No one can know, Joe, if it really is a medical issue.
Hey, Mohammed. One of the things that you have said to us over the past couple of weeks is not necessarily to sell, but to try to upgrade, if you will. If you have a particular equity that you think potentially has problems, try to find something up the stack, if you will, that might be higher quality. One of the questions I'd ask you, though, is so many of our viewers have 401k plans or have indexes, mutual funds, ETFs. In terms of upgrading those ETFs or upgrading those indexes, what would you be upgrading from and upgrading to in this environment?
So if you have indices, it's hard to be specific, but let me give you two. If you have a high bond fund, sell it and buy an investment grade bond. Remember what happens in these high yield bond funds. The more debt a company issues, the higher its weight in the index. So you are most exposed to the companies that are most vulnerable from a balance sheet perspective. So as a general rule, sell high yield, buy investment grade. If you are heavily exposed to non-US markets, come back to the US. The US is much more resilient and will make it through this crisis relatively better than many other countries. I am really worried about what's going to happen to certain emerging economies, for example. They can't afford the policies that we are implementing and they're trying to implement. So it's an up in quality, Andrew, whatever you can, and particularly avoid default risk. Default is the one thing that you don't recover from.
But just to put a fine point on it, Mohammed, for those out there who are just holding the S&P 500, for example, continue to hold the S&P 500?
Yeah, this is, I think, continue to hold. Understand that you're in for a volatile and probably downward journey, but buckle your seatbelt because most of the companies in that index are going to come back.
Okay, Mohammed Al-Arian, thank you, of course, for joining us again. Look forward to seeing you next week. Have a great weekend and stay safe in the meantime. When we come back, we got some new numbers out from Tesla. You got to see these numbers because that stock is jumping 15% in early trading on that story. We'll talk about it after the break.
It's Tune In Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique to
listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Commitment has always inspired us.
And now it's no different.
So we're here with financial strength, stability, and experience you can depend on.
And the online tools you need. Because you have always set the highest standard.
And reaching that standard is what we're made for.
New York City's a travesty. The mayor waited way too long to impose the lockdown. Now we're all paying for it. So I think a nationwide shelter-in-place order would make a huge difference in the course of this pandemic. Watch or listen live on the CNBC app.
Welcome back to Squawk Box this morning. Tesla delivering some positive news for investors just out with its first quarter delivery numbers. I want to get over to Phil LeBeau. He joins us now because that stock is moving up over 15%. Phil.
And it's popping, Andrew, because these are better than expected delivery numbers. Now, already you're hearing from the skeptics out there, the bears who are saying, well, look, they lowered down expectations. The street wasn't expecting as much because March with the coronavirus meant that the estimate came down to 79,000. They delivered just about 89,000 vehicles. 88,400 is the exact number. Here's how it breaks down in terms of their deliveries. And when you look at this, the Model 3 and the Model Y are going to get the most attention. That's going to be the volume for them. Obviously, Model 3 right now. The Y, they're just starting to do those deliveries in China as well as a few here in the United States. So the majorities are Model 3 and Model Y. And again, the total number, 88,400, better than expected. The production number of 102,000, that might be more relevant, guys, because people are looking at this saying, all right, we knew that they had problems in China with the COVID-19. Now we have problems with the plant in Fremont being shut down, but they came up with 102,000. Now the question becomes, what do we expect for the second quarter? And estimates are all over the map. And the question is also whether or not they can meet their target of delivering 500,000 vehicles this year. One other note in the auto sector, guys, I want to touch on. BMW CEO out with comments today, essentially talking about the state of the business as it deals with coronavirus around the world. And the CEO telling Oliver Zipse, telling a reporter that the dealerships have virtually stopped retailing. Not a surprise. It's hard to find many dealerships that are functioning either in Europe or in the United States. Also says they're preparing to ramp plants when the time is right. But large-scale China production, if there is a silver lining here, it's that large-scale China production is coming back. Whether or not we start to see the sales volume in China is a separate question, guys. But there is that indication of positive news coming in the auto sector in China. Right now, on the production side, let's see if the volume in terms of demand is there over the next month or two.
Phil, do you think there'd be a huge shock or surprise if any of these numbers weren't met? I mean, I feel like we're throwing out guidance for every single company under the sun. Why should we hold these guys to a different standard?
I think you're right. I think most people look at the guidance, whether it's Tesla, whether it's another automaker, and they're saying, how do we have any idea, A, that production is going to be close to what we think it's going to be, and B, the demand. It's all over the map in terms of what people are expecting on the demand side. So I think you're right, Becky. So that 500,000 figure for Tesla deliveries this year, if they have to bring it down at some point, I think nobody's going to be surprised by that.
Right. Phil, thank you. It's good to see you.
You too.
When we come back, we're going to talk about ad spending and the major pullback by companies with industry executive Tim Armstrong. That interview is right after this break. Squawk Box will be back in just a moment.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Last year, there were 3 victims of cybercrime every second. When a criminal has your personal information, they can do all sorts of things in your name. Criminals can use ransomware, spyware, or malware to gain access to information, like your name, your birthday, and even your social security number.
That's why Norton and LifeLock are now part of one company, providing an all-in-one membership for your cyber safety that gives you identity theft protection, device security, a VPN for online privacy, and more. And if you have an identity theft problem, we'll work to fix it with our $1 million protection package.
There are new cyber threats out there every day. So protecting yourself isn't a one-time job, it's an ongoing need. Now is the time to make sure that you have the right plan in place. Don't wait.
Norton 360 with LifeLock. Use promo code GET25 to save 25% off your first year and get a free shredder with annual membership. Call now to start your membership or visit lifelock.com/TV.
Welcome back to Squawk Box. The futures have had a little mini rally in the last couple of minutes, although it moves so quickly I haven't seen it in about 10 seconds. But last I saw it was the Dow was down about 120 or 130 points. Makes you wonder whether the risk today that we're going to see in about 40 minutes, whether it's asymmetric. Now, actually looks like we're down about 100. What does the market do if it's a really bad number? That with unemployment, do you say, wow, that this is worse than we thought? It is happening quickly. If it's a good number, you just write it off as well. You don't see the bad stuff yet. So I don't know whether it looks like it made the risk might be to the downside on the markets. I don't know how you can have a good number for the markets, but who knows?
Although
that claims number,
it's not going to be worse than the number we got yesterday. Yeah,
right.
But it's not going to be worse than the claims number that we got yesterday. And we were only up because of what you reported on the oil markets, which drove oil up and helped push those things up, too. We had been down when the jobless claims actually hit. So, I don't know. Anybody can guess at this, but what we're really watching... What we're really watching is what's been happening in media news and in other places, kind of watching the companies that are doing this. And we can tell you in media news that Disney says it's furloughing non-union employees at its theme park starting April 19th, while still providing full health care benefits and covering premiums. These are the type of stories, Andrew, that we keep watching to kind of keep our own scorecard of how this is happening, because it's happening so quickly.
Yeah. I think we're just going to hear more and more of this. We can only hope that this goes by quickly. Meantime, another industry that is bracing for a severe pullback is the world of marketing spend, advertising. In a recent research note, MoffettNathanson estimated the ad industry could see $26 billion in lost revenue. And our next guest predicting a downturn even worse than 2008. Joining us right now is Tim Armstrong. He, of course, is the founder and CEO of DTX Company. He's also the former CEO of Oath, former Google, and friend of the show. Tim, good to see you. How are you doing?
Great to see you guys. And just wanted to start off with something because I hear a doom and gloom a little bit, and I think the country's in a tough spot. But I just want to bring up a story you guys covered earlier in the week, which was Meals Up, with Meals Up with Kenny Dichter and Russell Wilson and Tom Brady and J.J. Watt and J-Lo. 10 million meals got donated by Meals Up and Wheels Up America. I'm a board member with Kenny at Wheels Up. And you saw what Jeff Bezos announced, yesterday, which was 1 billion meals. And I really do credit Squawk Box and you guys have great coverage of what all the business leaders are doing. And I think you created the first COVID unicorn for helping people, which is Feeding America, which went from 10 million meals to 1 billion meals in 72 hours. And I really hope that you guys know how impactful your coverage of this has been, and things like the Meals Up program that you covered. And one of the things I want to talk a little bit about today also with DTX is, the direct-to-consumer economy. We're going to talk about ads and things like that. I also, we're announcing today partnering with Mount Sinai, with Dr. Davis, and with Rich Friedman from Goldman Sachs, who's the co-chairman of the board of trustees at Mount Sinai, to really allow to use our technology. I think you guys have it. You guys will put it up on the screen, but to take flow codes, which is our main product we have, and allow people to directly connect to Mount Sinai, which is the largest healthcare system in the tri-state area, and is at the major company on the front line, fighting COVID. And we've been working with Dr. Davis and with Rich Friedman, and I got a call from David Solomon yesterday from Goldman Sachs. So I hope during this interview you guys will put up that code. If you're a consumer, a business person at home, you can just pull your camera out, point at the code, and we can start, and a banner will pop up. Just press on the banner. It'll take you right to a donation page from Mount Sinai. So sorry to give them Sinai infomercial.
Well, Tim, we've got the code up.
You have the code up
I
right
don't know
now?
if you can see it, Tim, and I think some of your audio is a little bit slow. The internet, you can call your old friends at Verizon. The broadband speed, not as fast as we'd always want. But let me ask you, Tim, and thank you, by the way, about your comments and all the work you're doing, because it's remarkable stuff out there. And you're right, the business community in many ways has stepped up in so many ways. One of the issues, though, that has concerned the world of media, of course, is the world of advertising and marketing spend. And you have a pretty dire prediction about that. I just wanted you to, if you could, try to walk through the permutations with which you think this is going to happen and who it's going to hit.
Andrew?
Can you still hear us, Tim?
Yeah, I can. My connection just came in and out, but I think what you were saying is, the concern around media and where things are going. And I would just say, Andrew, that, we're at the highest point in history of media consumption. Streaming media doubled year over year and it's gone up 50% in March. We're in a place right now where media consumption's historical high. Advertising is going to be at a historical low from what I see. Advertising is going to be down 30 to 40%. And so, businesses have kind of looked internally, but consumers are more awake than they've ever been. And I think it's creating, what is essentially through this downturn. We got to number one is take care of people and take care of jobs and those things, but two is it will help reform consumer behavior after COVID is over. And I think that's a very unique dynamic happening in the world.
What do you mean by that when you say reform consumer behavior?
Andrew, before COVID, there was already, things changing and an erosion in terms of analog going to digital, in terms of, in my estimation, retail going more towards, direct-to-consumer businesses. And now you have everyone at home being educated about more digital services, about more direct-to-consumer. And the offline world is changing. Retail stores are closing. You're seeing all the announcements there. So when we come out, you're not only going to have the shifting that was already happening, you're going to have a very fast level of educating consumers around what services are available. And I think you don't have to look far outside your family and friends to see people doing TikTok for the first time, or people buying, more direct e-commerce. And I think that shift, fortunately, unfortunately, is going to accelerate.
Let me ask you a question, though, about that shift, because part of the direct-to-consumer proposition is there are so many small startup companies that are trying to take advantage of not having storefronts that are going direct-to-consumer. The question I have for you is whether you think that those companies, all those startups that you see in your Instagram feed trying to sell you different things, are ultimately going to survive. Because if they don't, it's going to have a big impact. And we're obviously hearing from Google and Facebook and others that they're already feeling that.
Yeah, I think, Andrew, there's The strong companies and strong leaders will survive this, and they're very strong brands that have been built in the direct-to-consumer business. There's over 26 brands that just got together to coalesce on a program called Brands for Better, which are DTC brands giving 10% of their current proceeds back to COVID issues. And when I look at the DTC founders, lots of them, I know a lot of their P&Ls, I see the next one. Unfortunately, we just lost David Stern and Jack Welch recently. I see the next generation of leaders starting to emerge right now. And I think the people with strong balance sheets and strong business models and strong unit economics is one thing we preach at DTX all the time, is how to have strong unit economics, because that's what allows you to get through situations like this. So there will be a culling of the herd. I think there will be, the WeWork situation started to unwind some of the venture capital valuation. I think that would happen.
Okay. Tim Armstrong, always good to see you. Please stay safe and healthy, and we look forward to seeing you soon. Becky, over to you.
Andrew, thank you. When we come back, we're going to speak to House Minority Leader Kevin McCarthy for his take on the government's response to the coronavirus and aid for small business. Squawk Box will be right back.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app, available on your phone or tablet. Download TuneIn from the App Store today.
Socks for women in their exact shoe size. That's 7 individual sizes from size 6 to size 12, just for us.
That's one size sock for one size foot. Kane 11 is one of the fastest growing sock companies in America
because socks in our exact individual size is what we've all been waiting for. You won't believe the difference you'll feel when you wear socks that actually fit. It's mind-blowing comfort, and
they're made right here in the USA.
Think about it. How can a small, medium, large sock fit every size foot? That's crazy.
At Kane 11, we don't make our socks like rubber bands, stretching to fit every size foot. We use exact measurements, the finest quality, so each individual size sock fits your foot perfectly.
Thank you.
You deserve it.
What I love most about Kane 11s is that they feel amazing in any shoe.
Go to Kane11.com, get 20% off your first order.
And 100% happiness for your feet.
Only available at Kane 11.
Walk the world with me.
Both of you, get your together and figure out how to coexist.
That's the moment you're like, the cameras didn't matter, you were getting irritated.
Oh, this is going to be a fun one.
The Prophet, an inside look. All new Tuesday, 10 Eastern. CNBC, get yours.
Breaking news, futures on the move this morning, well off the lows of the session as the gains in oil continue after crude's best day ever. And it's go time for the government's emergency small business aid program. Billions of dollars are on the line, but are banks ready? We're hearing two sides of it. And this hour, the government's March jobs report will bring you the data and dig through some of the alternative metrics that could tell us what's going on as businesses fight to stay alive. Breaking news coverage on Squawk Box continues right now.
Good morning and welcome back to Squawk Box. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. Watching the Dow futures, they were just positive. They were up 50 points. Now they're back to right around the flat line, maybe just slightly positive, and that's saying something. We were down for most of the pre-market session, down about 220, 230 points or so. So this was all before this jobs number, which comes out at 8:30. I don't know how it can be a good number, but then who knows? Yesterday's claims number, as eye-popping as it was, the market still managed to be up almost 500 points. Oil, as we mentioned, is continuing its surge and is up again this morning. I think it's about $26 at this point. Anyway, we'll see what happens with the Dow. Treasury yields have not been the story. It's been more the equity markets and in the oil markets, but Treasury's down at around 0.59, 0.58 or so on the 10-year.
All right. Today marks the rollout of a massive aid program meant to help small businesses weather the economic pain from the coronavirus. But it was scaled up very quickly, and there are some questions as to whether the banks are ready and how this whole thing works. Kayla Tausche has been tracking all of this down. She joins us right now with more on that front. Kayla, good morning.
Good morning, Becky. For the 1,800 or so banks that are already Small Business Administration lenders, they will likely be able to flip the switch on this program today. For the other 3,400 banks in this country who have not previously participated in these programs, it's going to take a little time to get on board. SBA and Treasury last night released much needed guidance and an application for those banks to participate. And a lot of them want to take a few days to understand the program and understand exactly what it means and how they can most smoothly roll this out to their customers. This morning, JP Morgan Chase and Citibank's websites tell customers those loans will not be available today, but likely early next week. And I'm told by two industry executives that they're eyeing the middle of next week to have all of these banks be online and that it is not going to be an immediate transition. The guidance that was published last night did include some changes that the industry was seeking. The interest rate on these loans, if they're not forgiven, rises to 1%. That's so that community banks can break even on these loans and not lose money. And then there was some liability change so that if a borrower misrepresents their costs, the bank is not on the hook for that. Banks had also been pushing to waive some of the anti-money laundering guidelines. So far, that has not happened. Now, to be sure, there is a lot to study here, but banks are still expected to participate in this program. ABA President Rob Nichols in a statement said, we should all remember that this is an unprecedented expansion of SBA lending that will take some time before it's fully functioning, though noting that he expects all banks to participate. Last evening at a White House task force briefing, the Treasury Secretary, when asked about some of the hiccups in rolling out this program, said it's still important to get this money out as soon as possible.
We now need to execute. We need to get money to small business and American workers, and that's what we're doing. We've heard feedback from lenders, community banks, regional banks, and we spent the last 24 hours making this system even easier. So this will be up and running tomorrow.
After hearing all of that from the industry, they will surely now hear from all of these small businesses. I know I have all of these companies that are trying to apply for this aid who are looking for instruction and direction on how to get it and to learn a little bit more about how quickly it will arrive. The Treasury Secretary last night said it should be same day. Becky?
Kayla, why do the banks want to relax some of the anti-money laundering situations? How would that help things?
Well, it seems a little antithetical, Becky, right, to relax anti-money laundering rules for something like this that is supposed to target small business. But here's a real-world example. I heard from a small business last night in Kalamazoo, Michigan, who told me that their local credit union told them they are not participating in this program. So that company is now going to have to go find a new bank, build a new relationship in order to qualify for one of these loans and get that aid. That bank is going to have to study the financials of this company and their backstory and exactly what they do. The change that the Treasury made last night means that if that company misrepresents its financials, the government is on the hook. But if that company is in fact a Russian laundromat or another money laundering organization, and this is just a front, then the bank is going to be on the hook. So that's why they are so worried about compliance here, and they want to make sure that they follow all the normal rules and don't do this more hastily than they need to.
All right, Kayla, thank you very much. Joe?
Thanks, Becky. Join us now for more on the coronavirus relief package. House Minority Leader Kevin McCarthy Leader, it's always good to see you.
Good morning.
I just can't imagine this comes off without some hitches, and we're going to hear all about them. But in general, this is a program that can be implemented by the government and be successful to help small businesses out, Leader.
Well, look what we have done in this short amount of time. We're going to get billions of dollars out to small businesses who need it. Many of them are shut down, but think about what the program actually does. And I give the federal government and Secretary Mnuchin credit. He listened to the banks. He came back in a short amount of time, made the reforms that they were requesting. The form is just 2 pages, really, that you have to fill out. What we're doing here is keeping people employed, keeping doors open. You can get a loan for a short term. Government guarantees it. You don't have to fill it out with the SBA. You go to your local lender. That's something that'll make it work much faster. But if you use that money to pay your rent, pay your utilities, and pay your employees, that is a grant. That's no longer a loan. 75% you utilize to pay your employees, keep people working for these next 2 months, get us through this. That is a grant to you. And as a former small business owner, that's what I would be looking for. That would keep my doors open. If I'm an entrepreneur, I'm willing to take a risk. I'm an American. I know we'll get through this together. This is a program that will help small business stay alive, give them the liquidity for the next couple months, and keep people employed so they're not unemployed.
Leader, wanted to get your thoughts. We had a debate on our air yesterday with Senator Durbin about the bailouts of the airlines. And clearly the airlines are a critical and necessary part of our economy. And anything we can do to keep them in the air and keep their employees working is clearly important. The question, though, is that I'd ask you is whether their shareholders are somehow critical or somehow special. And how you can justify to taxpayers and Americans why saving the shareholders of the airlines was so important.
Well, it's not saving the shareholders of the airlines. What we're doing is keeping people employed. If you watch what we did, an airline is like any other company where they can go in because they're more than 500 employees and get a secure loan. But there's a portion of this to the airlines that we provide to them, much like the small business, of a grant. But it's not for them to buy. They can't buy back their stock or anything else. What it does is it's a guarantee to keep their employees on. We're supplying them money, just like in small business, that their employees stay on, that they're not unemployed. Again, get us through the next.
But Leader, it's reversed, though. Leader, it's reversed. The grant is up front. Unlike a small business, if they decide that they can't keep these employees on, they don't get the money granted back to them on the back end. This money's given up front. The other thing I was going to add to this conversation is one of the things we've seen is that the airlines over the past decade have actually prevented the government from getting access to people's information, flyers information, so that in the event of a pandemic, and the CDC and others have been calling for this for over a decade, for the airlines to actually provide this information so they could do tracing to avoid the situation we're in, and the airlines are lobbying and have lobbied successfully, even in this bill, against that. What do you make of that?
Well, I think the airline should work with us because it keeps everybody safer. But the one thing I do know is the money that's provided.
But on a pandemic level, right now, we're in the middle of a pandemic, and they aren't. And you're giving them the money anyway.
Well, we're in the middle of a crisis is essential. I just flew on an airline yesterday to come here last night to have a meeting in the White House. There were 17 people flying on a plane that held 200. I know that what's flying now is only 6% of the others. Those are thousands of people who would join the unemployment line. So the resources go to the employees themselves. The other is a guaranteed loan from government that gets negotiated by the Treasury Secretary if there is something more they have to give back. They cannot have a buyback, and they cannot give bonuses. What we're dealing with is a crisis that's coming upon us very rapidly. We're trying to make sure the health is provided through the CARES Act, so $140 billion go to the hospitals, the modern-day soldiers who are protecting us. It's also going to make sure that we keep people employed. There might be some things that aren't perfect. You may want to look back that somebody did not agree with us at a certain moment. That is an argument to have. But what's most important right now are health and employees staying on the job. That is the focus of what the CARES Act does. If it's not 100% pure by the way we have to write it and the time we have to deliver it, I'm sure those small things will underweigh what we're doing about keeping people employed themselves.
Are you on board, Leader, for a phase 4, or what? Is that one bridge too far, or you just want to know more about it? The president has a point about when is the time to do some infrastructure. I mean, rates are very low, and maybe it is a good time for that, finally.
We have just passed 3 bills, the largest ever made in American history, more than $2 trillion. I think our focus should be implementing those and making sure they're working. If you're going to do a phase 4, and I'm one who agrees that infrastructure is important, but looking at how legislation is made here and what the Speaker is requesting, it's not about infrastructure. It's about a Green New Deal. It's about Planned Parenthood. It's about sanctuary cities, and it's about changing election law. All the things that she held up the CARES Act for another week, that we'd be talking about the implementation already had she not done that. I think that whatever we do in the next phase should be targeted. It should be at the recovery time of when we need to do it. But right now, we should focus on implementing the trillions of dollars that we just passed, keeping people's health and making sure they're secure, but also keeping people employed. That's what the whole focus should be right now. Congress is not in. I'm here. I don't know that anybody else is. From that standpoint, the Speaker now wants to create a select committee to oversight. After in our last bill, we created 3 committees themselves, one with inspector generals, one with a person who gets appointed by the president, and a special one from Congress that the leadership appoints. So I don't think you need that as well. Seems more like political than it does about the care of the hardworking Americans that we should be focused on.
You wrote a letter to, I don't know if you discussed it yet, to Secretary Pompeo regarding oil production, and then we saw yesterday the tweet from the president about whether MBS and Russia really agreed or not to cut. Do you what are your comments? What did you say to Pompeo, and what do you think the efforts are they going to bear fruit, and to what extent? 10 million barrels sounds like a lot.
It does sound like a lot, and it's what we need to do. That's why I'm here. I'll be meeting with the presidents and the others in the energy field today with the White House. It's in my district, it's one of the most important jobs that we have out. We produce the second most of any county in the nation. But what we're having here, we're in the middle of a crisis from the coronavirus. We're having a man-made crisis in the energy field as well, with Saudi Arabia actually producing more, harming our energy industry, laying thousands of people off. With Russia and Saudi Arabia fighting together, that's something we do not need. And I want to thank the president for leaning in. Yesterday's tweet was very important, more important for the long-term safety of the entire world, because we're going to have a surplus here now with the economy turning down. But we want to make sure it's protect the energy worker across America, the ingenuity of what we've been able to do in the energy field itself, making us energy independent. I think the leadership of the president is very important, and that's why this meeting is so critical today.
All right, Leader, we appreciate it. Thank you. And you're going to be with other people. Just, keep your distance, and, good luck and stay safe.
We'll stay safe out there. Thank you.
All right, and we should...
Okay, when we return, a lot more... Go ahead, Joe.
It's just Speaker Pelosi, 9:30 Eastern Time. Wanted to just remind everyone for that. All right.
Okay, when we come back, the latest on the worldwide battle against the coronavirus. We'll give you the total cases. They've now topped 1 million. Former FDA Commissioner Dr. Scott Gottlieb is going to join us as we make our way towards the end of another week in what is clearly a changed reality. And then at the bottom of the hour, the March jobs report. You don't want to miss it. We're going to talk about the best signals in this week's and upcoming data, and what it's going to tell us about how the economy is really doing. Check out the futures right now as we head to a break. You're looking at the Dow off about 124 points. Stay tuned. You're watching Squawk on CNBC.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn. Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars, and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
When we founded Tommy John, Tom was obsessed with how to make underwear truly comfortable.
So we reimagined comfort through fabric, fit, and function.
We use soft, breathable, lightweight fabric with stay-put waistbands that never dig and stretch where you need it. We made a women's line so comfortable there are no visible panty lines and no wedgies, guaranteed.
For a limited time, it's Tommy John's spring sale. Go to TommyJohn.com right now for up to 30% off site-wide. That's TommyJohn.com. Log on now.
Welcome back to Squawk Box this morning. 3M is responding to President Trump's Defense Production Act order. This morning in a statement, the company says it looks forward to working with FEMA to implement the order. 3M CEO, we should say, is going to join the gang on Squawk on the Street in the next hour. But just to put a fine point on their statement, they do acknowledge that even though they're working with the United States government to try to ramp up production of mass and other equipment, they say we're currently manufacturing. That they're currently also exporting some of this material to places, including Canada and Latin America, where they say there is significant humanitarian implications of ceasing respiratory supplies to places like that. In addition, they say ceasing all export of respirators produced in the U.S. would likely cause other countries to retaliate and do the same, as some have already done. If that were to occur, the net number of respirators being made available to the U.S. would actually decrease. That is the opposite of what we in the administration, on behalf of the American people, both seek. They also seem to acknowledge that there are also problems of price gouging, saying we continue to act on reports of price gouging and unauthorized reselling related to 3M respirators. This activity, they say, is illegal and unethical, and they say they're working with the U.S. Attorney General and attorneys generals of every state to make it clear that 3M has not and will not raise prices for respirators, and offering our assistance in the fight. Of course, in this case, it appears they're implying that they're blaming distributors. There are about half a dozen distributors in this country that distribute their product. So we're going to keep our eyes on this story and look forward to that interview on Squawk on the Street in just a little bit. Becky?
Obviously, it's pretty nuanced, but it will be great to hear from the CEO coming up on Squawk on the Street. I'll be paying very close attention to that, too. In the meantime, the number of coronavirus cases around the world has topped 1 million, with nearly a quarter of those cases right here in the United States. More than 6,000 people in the U.S. have died from that virus. And joining us right now, as he does almost every day to talk about it, is former FDA Commissioner Dr. Scott Gottlieb. He's also a CNBC contributor, and he serves on the boards of both Pfizer and Illumina. And Dr. Gottlieb, it's great to see you again this morning. I kind of use you as my touchstone to run through everything I've been thinking about overnight to figure out where we're headed next. And I think what I've been thinking about a lot lately is what happens with asymptomatic cases? How are they spread? How do we control this? And if we don't have enough tests to even test the people who are on the front line, some of the healthcare workers at this point, how can we possibly get to the point where we have enough tests to make sure we're testing even people who are asymptomatic, to make sure that it's okay to go back to meet maybe the rest of your family, go back to work, go back to school.
Yeah, well, we're not going to be able to, Becky. That's the challenge with this virus, is that there's so many people who have mild disease or asymptomatic. Anywhere from 10 to 20%, if you look at the different studies, are asymptomatic, and a lot of people have mild disease, and that's what makes it such a dangerous pathogen, why it's so amenable to becoming a pandemic. If you think about SARS and MERS, those pathogens were very deadly, and most people who got infected with them got very sick, so they were easily identifiable in a population. If you had 100 cases of SARS in a city, you'd know it. You can have 1,000 cases of coronavirus in a city and you might not know it, because most people would have mild disease or be asymptomatic, and just a small percentage would present with influenza-like symptoms. And that's in fact what happened in Seattle, and that's why this pathogen is so lethal and so deadly. We talked about it hitting that sort of sweet spot early on in January. We were talking about that on your show. And it sort of occupies that sweet spot between being virulent enough that it's going to cause mass casualties if it gets into a big population, but transmissible enough that it can spread fairly easily. And the asymptomatic spreaders are part of that. There was a study in Lancet out this week that showed that people who were mildly infected with the virus didn't really develop full antibodies till about 2 weeks, and they continued to shed virus after that as well. It's not clear if they're still infectious after they develop antibodies, if they're still shedding virus, but you can surmise that they probably are. If they're still shedding virus, if you can still get a positive nasopharyngeal sample on them, so they still have virus in their nose, chances are there's a risk that they can still spread it. And so that's another thing that makes this virus, risky, or makes it spread very easily, is that after you get sick with it, you don't clear it right away. Some people seem to shed it for a period of time.
That's hugely important. Even friends I have who are healthcare workers, nurses and doctors, are being told that as soon as they feel better, they should get right back to work. They're also being told that there's an assumption that every healthcare worker has been exposed at this point, so if you're not very sick, we're not going to test you. How is this even possible?
Well, some places are retesting people to see if they've cleared the infection, and some of the guidelines do have a period of time that you want to wait before you get back to not taking precautions around the potential to spread the virus, because there's now enough literature that shows that people don't clear it right away. So you see people with antibodies, but still with virus that they appear to be shedding. And with a lot of other viruses, or some other viruses, after you develop antibodies to the virus itself, you no longer have detectable virus. With this one, it's a little different. In terms of the number of healthcare workers that have been exposed and what we call seroconverted, meaning developed antibodies to the virus, so they basically develop some level of immunity, I think the percentage is likely to be lower than what we think, more in the order of maybe 10% or less in cities that are heavily exposed to this virus than 20 or 30%. I think the perception that there's this vast pool of people out there who've already been exposed to this coronavirus and have neutralizing antibodies, have immunity to it, I think that that's probably overstated. And when we do the serology tests on populations, even heavily affected populations like New York, it's likely to be in the low single digits. So, the view that this virus has been spreading here for a while and we just didn't detect it, it's probably not the case. Every country that this virus has gone into, it's been fairly consistent. About 80% of people develop mild to moderate disease, maybe 10 to 20% are asymptomatic. About 10 to 15% develop more severe symptoms, require hospitalization. Anywhere from 3 to 5% require a higher level of care in the intensive care unit, and then about 1% succumb to the virus. That's been fairly consistent from country to country, and I don't think the experience is going to be any different here. There's not millions of New Yorkers who've had coronavirus and just didn't know it, and now they're immune to it. More likely, those people who remember having a bad bout of some kind of respiratory illness in early January had adenovirus or flu or something else, but not this.
All right. Hey, Doctor, separately wanted you to weigh in on this. There's a whole lot of people, including in the business community, who say, look, the goal here, of course, in terms of flattening the curve is so that we don't overwhelm the healthcare system. But once we've done that and get to even any real backside of the curve, that we should try to get back to business as quickly as humanly possible. And to the degree that the hospitals can handle it, we've done our job. Is that analysis the accurate way to think about it? Because I think everyone's looking at the duration of this and saying, okay, we see where the curve is, and what's the goal? Is the goal to eradicate it? Obviously, that's the ultimate goal. But in terms of how you're thinking about it.
Well, I don't know that we're going to fully eradicate it. There's going to be a low level of spread. As we come down the epidemic curve, there's going to continue to be a low level of spread. And even if you look at South Korea, they're still reporting cases on a daily basis, less than 100 cases, but they're still reporting cases every day. So there's going to be some background spread of this virus, and there might be some background spread of this virus in perpetuity that we just need to accept. And if you think of deadly viruses throughout history, throughout the last century, there was always background spread. I mean, there were always outbreaks before there was vaccines of measles and polio. You always had spread in the background. You tried to contain it.
Could there ever be enough community spread that actually unlikely really goes back up again, that it becomes a problem in terms of the healthcare community being able to handle it afterwards, after this curve?
Potentially, and that's what you worry about. I mean, if we don't get control of this, we can have another epidemic in the fall, and that's where we need a very aggressive surveillance system and hopefully a therapeutic that can vanquish this. But we're going to have to tolerate some low level of spread and lean forward and try to open the economy and just contain the cases that are going to emerge. There's going to be small outbreaks.
Dr. Gottlieb, thank you. We'll check in with you again next week. Have a good weekend.
Thanks a lot.
And coming up the jobs report for March. We're expecting to see the coronavirus start to impact the hiring data. But we're going to also talk about the full range of numbers investors and economists should be paying close attention to. Then we're going to speak with former Treasury Secretary Jack Lew on the $2 trillion relief bill that was already passed by Congress and the big small business relief program that's rolling out today. As we head to break, take a look at the futures. They have worsened again after turning positive. Dow is back down almost 200 points. Stay tuned. We'll be right back.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Frost, closing bell, weekdays 3 Eastern, CNBC.
You have to accept, you and me, that the world has changed, and we need to change with it.
And that's exactly what we've done.
From New York to Los Angeles,
London to Singapore,
we've changed course and continue to adapt.
Getting you the story
and delivering the facts.
Speaking directly to the newsmakers on the front line of this fight.
The world has changed,
but our commitment remains the same.
To keep you informed.
Stay safe.
We're all in this together. Together. Together.
Welcome back. This is CNBC's special coverage of the coronavirus pandemic and the market's response to all of that. We are awaiting the March jobs report. If you saw yesterday, the unemployment claims for the week were phenomenally high, 6.6 million, many, many times what anybody had seen before that. The week before was the highest number on record. That was 3.3 million. Let's get to Steve Leisman right now. He has that number. Steve.
Down by 701,000, certainly more than was expected. The unemployment rate rose to 4.4%. That's from 3.5%. Let's see. The change in these measures reflect effects of coronavirus. It seems like the BLS was able to pick it up, and maybe some of these layoffs happened earlier in the week that the survey week than was initially believed. It says employment in leisure and hospitality fell by, get ready for this, 459,000, mainly in food service and drinking places. Notable declines also occurred in healthcare and social assistance, professional and business services, retail trade. Let me come down here. The household survey, we'll pass on that. I'm looking for some detail here by industry. Retail trade down by 46,000, professional business services down by 52,000, healthcare and social assistance falling by 61. The big one, obviously, leisure hospitality down by 459. Construction down. Everything, let's see, I'm looking for something that's up here. Other services industries down by 24,000, mining down by 6,000. It just goes on. Federal government up by 18,000 in March. That's one thing. And that's about, let's see, average hourly earnings increased by 11 cents. I wonder if that's the result of some of the lower paid workers coming off the payroll first. I don't know, but that's a big jump, I think, for average hourly earnings. They're up by 3.1% year on year. The work week fell by 0.2. So that, for the moment, guys, ends a 9-year and 5-month run of positive numbers. And it's kind of quaint to think back to the days that we would all go back and say, well, how crazy is it that this number is again above 150,000 or again above 200,000? I was looking this morning in that 9.5-year run, about half the time the number was 200,000 or higher. But that would end it this time around. I think it's interesting that this amount of job loss was picked up. That was not the expectation. And what we don't know is how much of it was picked up. We know that 10 million workers have filed for unemployment claims in the last 3 weeks. This is showing job loss of 700,000. So it's just a piece of it. Not every one of those unemployment claims ends up as an unemployed worker. But there's a piece of what is certainly to come. I've seen estimates of 10% for the unemployment rate. I've seen estimates of 20% of the unemployment rate. Nobody really knows, because I think it was Stephen Stanley who said this morning, economists bring nothing to the table when it comes to forecasting the outlook for this virus, and that really will determine the outlook for the economy and unemployment. Joe?
But the previous month was raised 2,000. Have I got that right, Steve? I'm like, no. Anyway, Steve, stay right there. I
didn't see that, Joe.
Let's get. Oh, okay. Let's get some reaction. No, it's all about this month and really about the future. Let's get some reaction from our jobs panel: Kate Moore, Jason Furman, Michael Strain, and this is confusing, Rick Santelli, Mike Santoli. Anyway, Kate, start us off with your observations of whether this was in line, more or less, with what we should have expected and what we can expect for the future.
Yeah, look, I think it's fair to say that we, forecasting the economy right now is incredibly difficult, and it's very fast moving. And some of the stuff that we're going to be getting either from economic data or once we start getting into first quarter earnings season are going to be really backward looking. And we really need to be focused on the future when we're thinking about investment opportunities right now. So, this was obviously a bigger print than many people had expected. I think we're going to have an even bigger print in April. We all know that's going to happen. The bigger question is that what do companies do in order to shore up their balance sheets, to shore up their businesses, to get through this crisis and end up in the second half of 2020 and the beginning part of 2021, in better and stronger shape.
Hey, Jason Furman, former CEA chairman. I guess we never necessarily knew we'd see anything like this in our lifetime, did we? And Jason?
Yeah, we didn't need these data. We can open our eyes and look at what's going on around us. The unemployment rate right now is over 10%. The number of jobs lost is probably around 10 million or more. These data are way out of date because we're in an economy where just every day and every week things are moving so quickly. I think it's important that Congress really did a lot to help provide a bridge for a lot of these people. I think the unemployment insurance reforms are going to protect the purchasing power of a lot of the people losing their jobs. The question is, when and how will we be able to restart this economy? And, can you put the pieces back together? And Congress is going to need to do, even more to extend what they did, expand on what they did, provide relief for states, making sure they're protecting low-income households and improving the automatic stabilizers. But quite a month.
Yeah, quite a month. Hey, Michael Strain, you're at AEI, resident scholar. Anyone there making the case that we just need to let the invisible hand work here, and there's too much government intervention? Have you heard that, or everybody's no atheists in the foxhole at this point?
I mean, I think people quibble with some of the specific things that Congress has done, but the idea that we should not have a economic policy response to this is one I haven't heard. The most important thing, or arguably the most important thing that Congress did in its Phase 3 legislation and the big $2 trillion bill was provide a program that can ensure small business continuity. About half of all workers work for small businesses, and those are the businesses that are in the services sector job losses, restaurants, hotels, cafes, clothing stores, beauty salons, these sorts of things. And the key to bouncing back quickly is to keep those workers attached to their job. So the program, the Paycheck Protection Program that Congress put in place, essentially offers payroll grants to businesses. Congress said, we will pay your payroll costs for 2 months if you keep your workers and don't lay them off. And what we need right now is for that program to be implemented well. We need Congress, the Treasury Department that's actually in charge of implementing it and writing the regulations to work well with the banking community and to figure out what the banks need in order to get that money flooding out the door and into the hands of small business so that we can avoid a 25% Great Depression level unemployment rate, if at all possible. And right now, the reports that were in the Wall Street Journal this morning from the banking community are that they're feeling a little confused about the Treasury regs. That's understandable. It's a new program. It's trying to be stood up. But we really need to get those regs written. We really need to allow small businesses and banks to figure out how this program works, or we're going to keep seeing months where we lose 800,000, $1 million every month.
Michael, I'm just wondering if the specific program itself is maybe written in a way that's not going to accomplish that goal. First of all, we've already had 10 million people filing for unemployment claims. That number almost certainly understated by what is really out there. Secondly, there's a specific provision in this rule that I'm sort of scratching my head over. You don't have to have the people on the payroll and have paid them until June 30th in order to qualify for forgiveness for the loan. It seems like we're going to have a lot more unemployment, a lot more waiting by small business. So I'm just confused as to whether or not or how you see this program accomplishing that goal of not letting people go, not allowing that separation you talked about that you want to stop from happening, that ultimately until they have to bring them back on until June 30th. Is it designed the right way to accomplish that goal?
Yeah, it's designed pretty well. So one of the great things that Congress put in the program is that businesses who had already laid workers off, so, those 10 million workers who we've seen show up on the initial claims reports, businesses can rehire those workers and still receive forgiveness for their payroll costs, can still receive grants for their payroll costs for a 2-month period that begins when the loan is originated. So there's a specific provision in there to address the situation that many small businesses are in, where they've already engaged in layoffs after the program was enacted. Just hire those workers back, and Congress will pay their payroll costs for 2 months. In terms of the June 30th, the way the program is structured, if you show up and you take out this loan on Monday, if you take out this loan on Monday of next week, on Tuesday of next week, which is really the hope, then the 2-month period where Congress will pay not only your payroll, but Congress will pay your rent, your utilities, and your mortgage interest begins on the date that you take out the loan. And so, hopefully a whole lot of businesses will want to do that next week, provided that their banks are participating and they can actually get that loan.
All right, let's get to Rick Santelli, Mike Santoli. Rick, you start.
Well, I'll tell you, from the market perspective, I find a couple of things fascinating. The Dow, of course, has rallied. The implied opening is about 80, 90 higher than it was before the number. We see the interest rate complex actually ticking up just a bit in the long maturities. So everybody watching and listening is thinking, well, why does any of that matter? because at least from a market perspective, I'm no doctor. I don't know how this is all going to turn out, but I do know that markets tend to price in worst case scenarios. Even though we don't know what that is, at least at this point in time, the markets seem to be comfortable with certain information. And somebody mentioned the Journal, a couple of interesting articles, whether in the Journal of Financial Times. It certainly seems like Germany, which in many ways through its business relationships with China, enacted some measures to combat coronavirus maybe a little earlier than we did, but they certainly see some positive signs. Their economy and production has been running much higher than many other economies. And of course, we see certain other anecdotal evidence that there's some peaking going on. I will still say that many who believe it's going to be so hard to restart the economy, I would agree if this lasts longer than many suspect. If it's a couple of months or in that camp, I think that Congress has put plenty of liquidity on these programs. It's more a function of how they get up and running, as our guest just alluded to.
All right. Mike Santoli, interesting. Rick taking sort of a more positive point. We put the oil board in now. I think oil's up almost 12% now today, Mike. So I don't know what that's sniffing.
Might be the most immediate driver of just how other things trade, like the credit markets and like equities, more than the number we're getting today. I do think it's plausible that the equity markets, for example, priced in with a more than 30% decline in a month, at least the depth of the initial shock. And we all are in a fog about what the duration is and what the wear and tear on creditworthiness of companies and business impairment, all that stuff. I think that we're kind of reserving judgment on that, and the markets implicitly are doing that. So where the S&P closed yesterday is almost exactly 300 points above its low close, I think, or just about for this move. That seems to be your buffer between, okay, we might have priced in something bad enough, and okay, it's going to last longer, we might have an issue here. So beyond that, I think it's hard to have it stand up to a tick-by-tick analysis of exactly what the market is saying, except those things. But credit is to me the key swing indicator.
Okay. Want to thank our jobs panel. Thank Mike Santoli, who was just speaking. Kate Moore, thank you. The newly hirsute Jason Furman and Michael Strain. And I said Santoli. Anyway, thank you, one and all. Andrew?
Okay, coming up when we return, a lot more. Former Treasury Secretary Jack Lew is going to be with us to weigh in on the jobs report, this record number of jobless claims we saw yesterday, and the government's multi-billion-dollar small business relief package that is trying at least to roll out today. And a little later, don't miss a big interview with 3M's chairman and CEO, Mike Roman, after President Trump slamming the industrial giant in a tweet over its respirator masks and exports to other countries. We'll be listening to that and paying a lot of attention as we head to a break. Take a look at some of the biggest losers this week in the S&P 500. Stay tuned. We're right back after this.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique to
listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn. Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Watch or listen live on the CNBC app.
I got things I want to do, but student loans were holding me back. Credible.com helped me save $600 a month with a great rate. Now I can go do what I want to do.
Visit Credible.com to see how much you could save on your student loans.
When it's time to sell your house, there are lots of things that can go wrong, but HomeLight can help you get it right. If you need a great real estate agent, HomeLight will analyze all the agents from the top brokerages and find one who knows how to sell your home faster and for more money. Want to skip the stress of prep, listing, and open houses and close on your own timeline? HomeLight can connect you with a buyer who will pay cash for your home in a matter of days. No matter how you want to sell, HomeLight shows you all your options. Selling starts at HomeLight.
I'm a performing artist, so a healthy diet is one of the most important things. I also feel the same way about my dog. You got her a Farmer's Dog 10th in the mail. It's all fresh. I want my dog to have a healthy and long life. Farmer's Dog helps that out.
See the benefits of fresh food at betterforthem.com.
Welcome back. The government's March employment report showing a loss of 701,000 jobs. The unemployment rate rising from 3.5% to 4.4%. The futures right now, as Rick Santelli pointed out, did seem to bounce a little bit off of these numbers. They were down more than 200 points. I think when the numbers hit, at this point down about 100, maybe shaved 100 off there. And take a look at, as we have been watching, the oil boards this morning and oil prices. Last I saw, it was up about 12% today after that record advance that we saw yesterday, and a stone's throw from $30, not quite $30 a barrel yet, but getting increasingly closer. Becky.
All right, Joe, thank you very much. Let's get to CNBC headquarters and Jim Cramer. And Jim, I was watching Mad Money last night, and I love the point that you were making, that we cannot let the perfect be the enemy of the good here when it comes to these loans that are getting rolled out to small businesses. There are going to be lots of hiccups, lots of problems, and hiccups is probably too small of a word for it. Lots of confusion in how to get this out there, but the money is there. We have to work through this, and we have to see how this plays out. What are your hopes this morning as we think that this could be the beginning?
Yeah, well, we can't have small business be this time subprime. This is an attempt to make it so that we have something going. I mean, I'm going back and forth with many different bankers. They say they're ready. Obviously, they're going to be overwhelmed. I read through the act, and I also got my accountant to be able to explain it. But I have the virtue of having an accountant that can look through it. It's not that hard. I do believe they'll be inundated. I think they'll be openly criticized for being not ready, but they're doing everything they can. I mean, it isn't like they put 50,000 people on this. So we'll have Brian Moynihan from Bank of America talk about it. Talk about how hard it is, and I know that he's got a lot of branches, and he's one of the biggest bankers, and I think that what we want to do is go right to the source to see if they're ready. This is something that it is urgent and necessary, and I have Speaker Pelosi on later today. She agrees. I mean, we got to do this because we're talking about literally tens of millions of jobs, and we're talking about companies never reopening. When I read it, I actually think it's quite good for business people because of the two parts, the 10,000, but then also to be able to get reimbursed for the workers you don't lay off. But I know also there's just a lot of companies, Becky, that's already too little too late. And that's where we got to try to figure out what to do.
I guess it's going to be the second derivative of the people who don't get help, the problems that kind of pop up along the way. And I guess some of the unintended consequences that might come through with some of these things. Companies, small businesses saying, okay, if I take this loan and then this lasts for longer than I expect and I can't bring my people back that quickly, am I ever going to get repaid if they end up having to lay them off because this just goes on longer than anyone's anticipating right now? I guess that's kind unknown.
There was a lot of chaos yesterday. A lot of banks had conference calls with small business people trying to explain, and they were baffled themselves. That's something, again, I want to ask Brian when we talk to Bank of America. But again, I come back. This was done with alacrity. It was done to help small business and for employees that work for it. This was not a bank bailout. It's very different from 2007, 2009. Secretary Mnuchin worked to be able to have it be bipartisan. I think there's going to be people who want to try to make it so that there's a fight here. That is not the notion. This is a war against COVID, and the way you have to fight this is you've got to keep these companies alive. It's nothing to do with what they did. This is COVID, and I know you had a great segment about insurance, another wrinkle about business interruption. What do you do if the government closes your company? I mean, isn't that some sort of act of something? But we know that without this, it's subprime, and we're never going to be able to untangle it.
All right, Jim, thank you. We'll be watching very closely both with Bank of America, Nancy Pelosi, and with 3M. Looking forward to that interview for you, too. See you in just a few minutes.
And before that, coming up, former Treasury Secretary Jack Lew on the economic damage from the coronavirus. And then next hour, as we just mentioned, House Speaker Nancy Pelosi going to speak with CNBC about the rollout of the government's relief package. We're coming right back.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Evolves from New York to London and around the world. The stories that matter to your health, your job, your 401k. Stay connected, stay informed with CNBC. Watch and listen live on the CNBC app.
Bobby, come quick.
What's going on?
Something huge, like a lot bigger, is coming to your home. Wait for it! Happy birthday!
What a troll.
Trolls World Tour. Rated PG in theaters and at home on demand April 10th.
Welcome back to Squawk Box. The March employment report, I should say, showing a loss, though it is an unemployment report right now, of 701,000 jobs last month. But because the data was collected in the middle of March, we know it still doesn't capture the true impact of all the coronavirus-related layoffs so far. Joining us right now to talk about jobs, the government's $2 trillion relief package, and what may come next is Jack Lew. He's, of course, the former Treasury Secretary of the United States. Good morning to you, Mr. Secretary. Thank you for joining us. First, on the jobs numbers, where do you think we are and how bad do you think it gets?
Well, good morning, Andrew. Good to see that you're all well. I think if you look at the jobs numbers, there should be no surprise that they're showing an increase, and if anything, it understates with the impact. It's clear that when you shut the economy down, 10 million people are applying for unemployment, out of work, looking for the future. The question, I think, is not to overreact to these numbers, which are pretty much what we expected, whether they're a little above or below expectations, and to think about what are we doing to make sure that people have what they need while they're unemployed or while they're out of work, and how do we make sure that the economy can be turned back on as quickly as possible. That recovery is going to be the thing that determines where the economy goes in the future. And I think that when you're looking at a recession that's caused by a public health crisis, everything is driven by the health issues. What we can do as a matter of policy is make sure that we maximize the chance that we come out of this as quickly as possible.
Okay, well, then let me ask you about those policies, including this $2 trillion package that's been put together. Today, of course, the small business loan program is supposed to begin in earnest, though we're obviously hearing some questions and concerns about how quickly it's going to roll out. Some banks still trying to go over the information in terms of how it's put together. Your assessment of that program and whether you think it's going to be enough.
Well, first of all, we have to embrace the enormity of the undertaking. We're talking about a volume of activity that we've never seen out of the Small Business Administration. We've never seen out of the lenders who participate in it. So the execution of this is absolutely critical to the success. Let's remember the goal here. The goal here is to make sure that people have money to live on while the economy is shut down, and that businesses are still there to turn on the lights when we get through this. That means that we have to suspend some of the normal considerations, which frankly were central to my policy considerations for the 3 decades I was in government. Usually you ask a lot of questions about efficiency. You ask a lot of questions about false payments. You ask a lot of questions about moral hazard. That's not really the concern here. The concern here is getting money out quickly, getting businesses and people through the moment. Now, when you look at what is being rolled out, it's a little bit of a contradiction. On the one hand, there's 100% federal guarantee, so banks have no credit risk. On the other hand, they are going to have to underwrite these loans, and I hope that the rules make it clear that there won't be micromanagement, so that if there's some false piece of information that a bank didn't know, they have to worry about their exposure on that. The reality is it's okay to make some mistakes here if we get most of the money out to the right place. The challenge here is not to get it perfect. It's to get it out and to be close. I think that's very different from the largest businesses where there's a proper concern for very, very detailed oversight because of, A, the amounts involved, and quite frankly, the resources that those businesses have to get through this crisis, whether or not the government assistance is there. For these small businesses, it's a matter of life or death. And if they can't turn on the lights, then you don't get people back to work and you don't have a quick recovery.
So what are you suggesting as it relates to big businesses?
So look, I think on big businesses, there needed to be a response. I'm not critical that there was a response. I think that the debate in Congress, which frankly slowed down consideration for a couple of days, was on how to provide a degree of oversight and reasonable conditions. I think the conditions that they put on the big businesses are right. There shouldn't be dividends or stock buybacks or big employee, executive compensation packages. I think the question of who gets the loans, how the decisions are made, transparency is critical. I think it's very unfortunate that there's now a growing divide over whether or not that oversight will be allowed to work. We are not done dealing with the problems created by the health crisis. There's going to be a need for trust. If there is not clear oversight, and if the administration, through signing statements and criticizing congressional attempts to have meaningful oversight, undermines that agreement on this very important bill, it will make it much harder to deal with what needs to be done next.
Let me ask you a broader question, Mr. Secretary, and we only have a minute. Long term, how do you think this changes politics, and how do you think it changes the politics of business? For so long, the world of business has looked for lower tax rates. We've all had conversations about whether we should have higher taxes or lower taxes. Obviously, all of that's gotten pushed down, and yet here we are again in a situation where the government is effectively providing insurance for everybody. They've done it now this time, and we had this 10 years ago. You could argue we had this after 9/11.
I think this is very different from 10 years ago. The small businesses that are closing and even most of the large businesses that are suffering had nothing to do with the crisis. Some of them were in weaker condition going in, and there are legitimate questions for big businesses that did big stock buybacks, how much their equity holders should pay. This is a question of a health crisis, giving time for the health crisis to pass and being able to turn the economy back on. It's singular in my experience. It's not like anything else.
Right. Mr. Secretary, we always appreciate your time. Thank you so very much for joining us today.
Good to be with you.
Thank everybody who's watching. We'll be right back next week. Squawk on the Street begins right now. Have a good weekend, everybody.
Good Friday morning, everybody. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber and Jim Cramer coming to you live from different locations on this Friday morning. Very busy show today as we take a look at futures in the red. Jobs, of course, minus 701,000, ending a record long streak of job growth in this country. We'll talk to the CEOs of 3M, UTX, and Speaker Pelosi this hour. We got oil CEOs at the White House later on this afternoon, Jim. And, of course, a pivotal day as this SBA loan program tries to get off the ground. Just an incredibly monumental challenge for the banks, the government, and the small businesses that will apply.
I'm actually hopeful. I know there's a lot of community banks that are already up and running to be able to do it. They've started. There are a lot of actually some very interesting smaller online banks that are ready to go. We'll hear from Brian Moynihan from Bank of America about whether they're ready to go. It has been hard to understand. I know I had to hire someone to understand it, but I think that a banker can make sense of it. There is a lot of money that's coming to people. It would be a huge mistake for someone with 2 employees, 3 employees, to not immediately go to their bank because the money's there and you got to get it. I'm not saying it's free money. I am saying they're ready. And I think I'm a little surprised that they're all ready. They are ready to give you the money. That's what I think. David? You disagree?
Yeah, I'm here. Guys. Sorry.
We're trying to establish this rhythm
David,
where who talks in what order.
I know. We are. And I can't even see you guys, so I feel like a lot of our guests, of course, but I think we're doing pretty well. Jim, listen, this is crucial, as you say. You do need, if you have a professional relationship already with a bank and an accountant, you're in a much better position than if you are somebody who is a sole provider in some way of services or somebody who runs a small business that doesn't really have a lot of banking relationships. And I think that's got to be a crucial part of this as well. One reason why Secretary Mnuchin joined us earlier this week, trying to get people to go online and figure it out.
Yeah, look, I think this is one where the small business people, rather than go out of business, have got to find a banker. And I think they will. I actually think that this is one where, when we speak to Mr. Moynihan, a bank like Bank of America, this is their chance. This is their chance to be able to get some really good accounts because they want these accounts. They put them online. They make a lot of money and fees off them. This money's guaranteed. They're not going to get hurt on the loans. And this thing's done on the fly, and it's done very fast. And I know both the Democrats and Republicans wanted to have it. We'll speak to Speaker Pelosi. I know she very much wanted this. I know that there's a sense that it could be a run-amok program. The hell with it. This money these companies are going to go out of business without this. They're going to go out of business.
I think that's a good... Now, the U.S. Chamber of Commerce, Jim, has a study out this morning in which they say a quarter, about 25% of small businesses say they have 2 months or less before they face permanent closure, and about 11% say they have 1 month before they face permanent closure. And that is clearly something that we cannot allow to happen.
And a lot of companies, I think, already decided that things aren't so good, and they have closed. I think that they should rethink their plan. Look, I went over how much it's going to cost me for 2 restaurants. And if it wasn't backstopped, I have to tell you, I would only keep one of them. The other one, I would just try to do something nice for employees. Now I suddenly say, hey, listen, this could keep me to be the only company that's on the block, but because I know how to do it. Right. But if you have to know how to do it, but it's a fantastic program. I mean, there's this $10,000 grant that makes it so that you're nuts not to keep your business open. I'm not kidding. You got to keep your business open. And that's what they need to do, because this is the base. This is not President Trump's base, but the base of America. And you can't get these people, the dry cleaner people, to immediately start building bridges. You can't get the hair salon guy to immediately start building the tunnels. In other words, traditional infrastructure, as great as I think we all think it is, does not lend itself. These people have businesses, and they were closed. They were closed by the government, for heaven's sake. So the government has to do something. It's only right. I had a business that was closed. It was doing great. Then one day I learned I was closed. Hey, you better help. Now, of course, I have the money to be able to do it. I'm lucky. I'm blessed. It's fantastic. I'm healthy. It's great. Knock wood. But there's a lot of companies have to recognize they got to call the banker and call a community bank. Community banks are open. They've already processed 700 loans. I know that's nothing, but you know what I mean. It's a gist.
Yeah, but guys, I'm sure you have conversations. There's not one that I don't have during the course of the day that doesn't end in some way with prediction. When do you think we're really going to get back to work? When do you think things are going to return to some semblance of normal? And it's very difficult to know at this point, but certainly there are those who don't believe that we are going to be fully back to work for quite some time. And I'm very curious to see during her interview with Speaker Pelosi, Jim, what she has to say about another phase, because it would seem clear to me that as important as this program is, and as important as that $2 trillion in relief money is and getting that out there, there may be another wave that is needed, given the fact that it's not like everybody's going back to work suddenly on May 1 or June 1 or even July 1. It's going to take a while.
Yes, but we've gone from being we have something to fear, which is COVID, to we have nothing to fear but fear itself and the complications of some regulations, which, by the way, are not that hard. I know it seems like they're impossible, but they're not that hard. And I just implore people to realize there's free money for you. Get it. Stay in business. Get it. David, I know you got a big one right now.
Yeah, let's do that, Jim, of course, because let's get back to sort of the virus response and the government's response, which has certainly come under some criticism as well, but also criticizing some U.S. companies. Chief amongst them, well, President Trump yesterday, late in the day, slamming 3M after invoking the Defense Production Act to get the company to produce more respirators, more of the face mask, the N95 mask. The president tweeting last night, quote, "We hit 3M hard today after seeing what they were doing with their masks. P-Act all the way. Big surprise to many in government as to what they were doing. Will have a big price to pay." Well, joining us now to respond to the president is the company's chairman and CEO, Mike Roman, of course, of 3M. Mike, good to have you with us again. And let me let you respond if you can. Please respond to the tweet itself and to what you thought when you read that and heard that and what you have to say.
Yeah, David, let me say this. The idea that 3M is not doing all it can to fight price gouging and unauthorized reselling is absurd. The narrative that we are not doing everything we can to maximize delivery of respirators in our home country, nothing could be further from the truth. We are doing everything we can to maximize our efforts and to fight COVID-19 and to support the healthcare workers here at home in the U.S.
And so what is going on here that they needed to invoke the Defense Production Act? I know you ship to Canada. I know you ship to Latin America. I know you are shipping from your manufacturing now in China and have vastly increased production from what was 16 million to as many as 32 million now. But why did the administration need to do this?
Well, David, we are doing everything. We have increased our production, as you said, by millions and millions. And we are bringing more respirators in from China. We are net importing into the U.S. And we've been telling the administration for days and days. And it's important, David, that you understand we're more than happy to shift our overseas production to the U.S., but there are going to be consequences on a humanitarian level as we are the sole and often the sole provider of those respirators in countries around the world where we put manufacturing to support them in just this kind of circumstance. We will comply with DPA, and we are taking steps to increase our import where we have that ability. As the COVID-19 outbreak in China has subsided, we've been able to work to prioritize and allocate more products, get approval to bring product from China into the U.S. And we have 10 million now starting to ship, 10 million on a monthly level, starting to ship this week. And we're looking to expand from there. And we're anxious to work with the administration to do just that. In the meantime, we will comply with the Defense Production Act. And we will continue to expand our capacity in manufacturing in the U.S. as we have laid out. And we're going to double again what we're producing in the U.S.
But you do indicate in your statement, Mike, that in fact this policy could end up hurting us. You say if you ceased all exports of respirators produced in the U.S. would likely cause other countries to retaliate and do the same. Some have already done that. And if that were to occur, the net number of respirators being made available to the U.S. would actually decrease. Do you really think that's a real possibility?
Well, here's the kind of how it lays out. We have a small portion of our respirator production in the U.S. that goes to Canada and Latin America. It's been a long-standing commitment to the healthcare workers in those countries, and we are the primary supply for them. And we are net importing with what we're bringing in from China. The idea of bringing all of our production back overseas, we've already seen export restrictions out of the EU, export restrictions out of Asian countries, and that has been the response to even the idea that PPE could leave their country. So it is something to consider. I think that's where the help of the administration can be critical to help us, avoid that and to help move forward the right way. And then there's just the consequence on a humanitarian level, because we are the sole provider in many cases of the respiratory protection for healthcare workers in countries around the world.
Well, then, Mike, is the administration not being honest about what really went on here in terms of provisioning respirators and perhaps just trying to cover up their own inadequacies and properly preparing the country for this pandemic?
Well, I think I laid it out for you. How the narrative was presented, and overnight the narrative that is kind of propagated broadly and the focus there, it's just not true. We are doing everything. The employees of 3M around the world are working around the clock, and in the United States to deliver and continue to increase. We saw this in January. We decided to double our production in January, long before anyone had called for a big step up in the United States. We engaged with the administration at the end of February and gave them very transparent about what we produce everywhere around the world, including the U.S., and with our plans. And we've been in constant discussions with them about how to best work with them, and we will continue to do that. We're working with FEMA right now very effectively to prioritize where our products go. So the narrative that we aren't doing everything we can as a company is just not true.
Mike, Jim, how you been?
I'm doing well, Jim.
All right, you hang in there. Listen, there's an impression from the president's tweet that you, let's just say that they wanted you to do something for a long time. When were you first aware that, or spoke to someone in the White House that you were ready to give them the mask?
We had our first engagement at the end of February.
No, Feb 16, wasn't it?
I think that was the first outreach. By the last week of February, we had pulled together all the information that they were asking for and had delivered that, and that opened a pretty transparent relationship. And we had Vice President Pence visit us on March 5th at our headquarters here in the Twin Cities in Minnesota, and we had a great discussion. At that point, the emergency use authorization had been declared by the FDA, which was a big step in allowing us to bring the industrial respirators into healthcare. Prior to that, they were not allowed to be sold into healthcare. And so we redirected all of our production of industrial respirators into healthcare, prioritized it, even ahead of the PrEP Act amendment. There's been some narrative that we waited until the final PrEP Act amendment approval. That's not true either. We stepped into it as soon as we saw the emergency use authorization. We started shipping product to our healthcare customers. We were hearing the outcry at that point and needed that EUA, that emergency use authorization, to really pave the way for us to bring the large volume. Our normal healthcare volume is only about 10% of our production around the world, including in the U.S.
Okay,
now
I want to be really clear about this. When the White House called you in mid-February, did you say that you had other commitments and you could not help the United States? Because I watched a program last night on another network that basically questioned your patriotism, said that you would sell out the United States and its first responders. But if you agreed in mid to late February to help the president, I don't know how you're viewed as a sellout.
Yeah, Jim, until the COVID-19 outbreak became really front and center in the United States, our demand in our respirators in the U.S. was largely industrial. And so we were selling, this is kind of how it works. And this gets to the price gouging and the resellers. We manufacture respirators. We sell them to distributors. They sell them to end users. Until that COVID-19 outbreak, the distributors sold it to anybody broadly.
Right.
As soon as the pandemic came in, we worked with distribution and told them where they needed to prioritize healthcare. So up until the end of February, or until really that emergency use authorization, we were selling some respirators broadly to non-healthcare applications. So it really was that changeover in early March.
Okay, now the president's tweet says P-Act all the way. Is that Patriot Act or is that PFAS, which is your problem with groundwater, which the Justice Department is not currently on? But if the Justice Department decided to go after you at the advice of the president, they could make your company's life miserable. Which is what is P-Act?
Yeah, I wasn't clear, Jim. I took it at either the PrEP Act or the DPA. My view is it was what we've been talking about since yesterday is the implementation, the order for the Defense Production Act, and that's been front and center in, as I said, and we will comply. We're working with the administration to look at how best to do that. We're also working with the administration to find ways to increase the import of respirators, more from China. We are bringing 10 million in, but we produce more than that in China, and we'd like to work to expand that.
Hey, Mike, it's Carl. Two really quick questions. One is, when do you forecast supply-demand balance on respirators in this country, at least for healthcare? I mean, is there a date that you have in mind? And more broadly, to Jim's question, I mean, the criticism is going to come not just from the administration, but from the public at large, that after being celebrated for so long for being global, you're not American enough now. What's the answer to that?
Well, just when you look at the balance, the increase in capacity that we've laid out, we are at 35 million respirators a month in the U.S., plus the 10 million coming in from China. We are expecting to add about 5 million to that as we get through April. We'll add another 10 million a month as we get through June. And then we're fast-tracked investments, and we have great support from suppliers and from governments as well to make sure we get this as fast as possible. We'll bring more online late this year. So we'll double our production in the U.S. again by the end of the year. That's what it's going to take to get in balance. I think near term, we have more demand than we have production capacity, and we're not alone. We are only one company providing respirators into the solution set, but it is very high demand right now. That's why it's important that we are working every way to increase capacity, bring more products in where we can, and think longer term. There's a large order from the government, which we replied to and have an award coming for longer term production of respirators. And we are investing in capital to bring that capacity online as we go into next year even. So it's a number of steps, and for us, Carl, it's about doing everything we can near term, because that's where the need is urgent. April, the month of April. What can we do to maximize everything we do in April?
Yeah, Mike, it's David again. There is obviously a concern as well, though, about price gouging. There is a broad desire on the part of many Americans to have face masks at this point. In fact, we may even see the CDC recommend it in some way. What do you say to those who are now looking at a box of 20 respirators that cost as much as $500, which is far above what its previous cost had been? And who's responsible for that?
Yeah, it's unethical and it's despicable. And, as I laid it out, we sell through distributors. Since the pandemic came on and we've been selling everything into healthcare, we are working with highly reputable distributors, and we have everyday conversations, making sure we know where those products are going. We have not and would never raise prices ourselves. Our distributors, we're holding them accountable, and we will take action if we see any issues with them. The real issue in the marketplace are those resellers that have collected inventory maybe back in January and February or other parts of the world, and they are now on the market reselling them. And we're fighting that. We're working with the Department of Justice and with the state attorney generals. We are identifying resellers that we know are either have counterfeit or price gouging activities. We are all in on this. And we've been doing this since we redirected our focus on healthcare, and we saw this emerging as a big issue. So it is something we're all in on. The narrative that we aren't paying attention to this or we aren't acting is just not true. They're not informed, or they don't care to understand the facts.
Right. And finally, Mike, longer term, it's not hard to imagine a world in which people want to wear face masks of some fashion for years to come, potentially. Is that your plan or thought that that's the way the world's going to go? And do you see yourself having increased capacity in terms of production for years to come?
Well, David, we have had a strategy since SARS that we keep idle capacity available for these kinds of events. We knew they were going to come again, H1N1, swine flu. So we've had idle capacity that enabled us to double from our normal run rate in industrial and healthcare demand. And now we have made investments to double again. So we're already at 1.1 billion respirators worldwide per year that we're producing. We're going to go to 2 billion as we come out of this year. And we're working with the Department of Defense and others in the administration to really understand what more we need to do to deliver on the changes that are coming, including increasing stockpiles, not just in governments, but in healthcare providers as well. So there's a lot of learning going on right now. We are not hesitating to step in. We're ahead of the curve. We've been ahead of the curve in terms of our investments and our aggressive moves here. And we're staying there. We're not waiting for anybody to tell us what to do. We've been a leader in this marketplace. We've seen it since SARS, and we've taken that role proudly. And I'm very proud of the 3Mers around the world for what they've done to step up. Up until yesterday, we received nothing but congratulations and thank yous with a few negative narratives out there. To see this turn overnight and to see the efforts that our team is putting in, it's disheartening, but we are standing tall, and we were proud to keep fighting COVID and doing everything we can for the U.S. and other humanitarian needs around the world.
Mike Roman, always appreciate your willingness to talk with us. Thank you for joining us.
Yep, thank you all.
Mike Roman's the chairman and CEO of 3M. Jim, you heard it from him, of course. Listen, this is administration, and you know a number of these people in particular that, well, can't always be completely trusted in terms of giving us the facts.
Well, look, I think there's a problem here, and we saw it with Puritan, which is the company that's the swab experts. They make the swab that was a proprietary swab for the nose for the test. We saw it with Medtronic. These are companies that want the call from the president. Puritan wanted the call from FEMA and said, listen, we want you to get all your stuff out of distribution, whatever you can, and just help us. Medtronic has the same problem. They have relations in Italy and Spain. It's a big Puritan's a local U.S. company, but Medtronic, big company that's based here, although it's got it's got an address over in Europe, David, because of the stuff that we used to talk about to make your taxes better. But Mike Rose, he's in a tough spot because he's got manufacturing all over the place. He's an international company that happens to be based in Minnesota. So unless he gets the call in February from the president that just says, okay, listen, we don't care. Everything comes here or X, and that's really not the American way. But if he had done that, then Roman would have pulled everything from the distribution. My dad was a distributor of 3M for 30 years. And if my dad got the call from 3M and said, listen, we need your stuff back, he would not say, well, hey, so what? No, I mean, the distributors work at the behest of 3M. So there was a way that Mike could have done this better, but there was a way that the administration could have done it better. But then again, it's COVID. Who the hell knew what to do? Who knew what to do?
Really quick, David, Jim. I mean, we're talking about medical supplies today, but other countries are starting to limit their exports of rice. We were already headed in sort of a nationalistic trend, but now you're going to start to see countries and companies start to talk about what do we want to keep home.
But Benioff did this big airlift. He went over to, you can check his tweet, he went over to China with a FedEx plane and got a lot of masks back. I mean, it is a little crazy. I just wish the president and the administration would not threaten. I don't know what this P Act is. Anybody know what that is? A Patriot Act? What is it like Mike Roman's not a patriot? I mean, I met the age, seems like a patriot. I mean,
Yeah, he does. I don't know what the P Act is.
No, retribution is not. We can do that later if there's somebody did something wrong. Yeah. We're trying to be united here. We have a common enemy, which is COVID. It's not 3M. Yeah. 3M not the enemy.
No. All right, guys, let's move on as well this morning because we have so many different CEOs that we want to hear from, not to mention Speaker Pelosi coming up in a bit. But today also a momentous day for the company that used to be known as United Technologies. In fact, Raytheon and United Technologies have completed what was a merger of equals this morning, creating what will be a pure play and, of course, aerospace and defense. Don't forget, Carrier and Otis also now being spun off as separate companies. And joining us now is the CEO of Raytheon Technologies. Note the name change, so to speak. It's no longer United Technologies, but it's the same guy who used to run that company. Greg Hayes, nice to have you this morning. Thank you for being with us.
Morning, gentlemen. Good to be on.
It's good to see you, Greg. The world has changed so much in the last month, let alone since you first announced this transaction with Raytheon. And I wonder, there are many companies that feel better having size and scope, bigger balance sheet. Are you regretful in any way, given the current situation, that in fact you are jettisoning parts of this company and becoming a pure play?
David, it's an interesting question, but I would tell you, I can't think of a better time to be coming together with Raytheon and forming this really big company called Raytheon Technologies. It's been quite a journey to get it all done. Before maybe we get into that in more detail, I just want to shout out to all the folks who worked on this for the last year or so at both companies, as well as on the spins. And also thank all the folks that are still working on the production lines today. The health and safety of our employees is first and foremost in our minds. And in these difficult times, it's great to see the work ethic and the camaraderie amongst the troops to get all of this work done on time, on schedule, to bring these companies together today. It's a phenomenal effort. I would tell you the idea of bringing the companies together, when Dr. Kennedy called me a year ago, I was a little apprehensive because I thought we had a great hand with the commercial aerospace business and some defense. But as he and I had the conversation over the ensuing months, it became evident that bringing these businesses together was a technology play. We could deliver innovative, game-changing technologies to our customers together that we could have never done on our own. So, look, it's a great combination. We've got 195,000 people, 60,000 engineers, still working every day to deliver on those commitments.
And you feel as though Carrier and Otis are going to be in a good place for their respective shareholder bases as well, Greg, as they go out as pure plays into this vastly changed world?
Yeah, it's an interesting question, but I think it's one of the things that we worked very hard with the board to make sure that the capital structures for both Otis and Carrier could withstand a major recession, which is, I think, of course, where we're headed. Both of them are investment grade credits. Both of them will have good balance sheets. They'll have debt loads that they can easily service. And, Otis especially is very resilient in these kinds of markets. As you know, most of their revenue comes from servicing elevators, not so much from installing the elevators. And the servicing is going to continue. Even as the crisis in Wuhan developed, we had 60 or so service technicians there who continue to provide service, continue to service the elevators and make sure people could move about safely. So they're in a good shape. Carrier, we've seen this play before. They know how to cut costs. They know what to do. And again, I think both businesses have great global brands, good global strength, and they should be just fine.
Yeah. Well, Greg, one would assume you know what to do as well in this new environment. Looking at, I think, Cowen and Company, I think it's Kai Van Rumer's latest numbers, a 44% drop in your pre-COVID guidance is what he's pointing towards, given, of course, the significant decline in the aerospace market. When you announced this deal, you announced the possibility of significant shareholder returns of capital. I would assume in this environment that's no longer the case, is it?
Well, look, I think as we enter the merger today, we've got a very solid balance sheet. We've got about $7 billion of cash on hand. We've got $5 billion of backstop financing. But more importantly, we've got record backlog on the military side, about $70 billion of current backlog. And as we deliver that, we're going to generate strong cash flows. Even with the commercial aerospace business down, We still see positive cash flows for the year. We still see the ability to continue to pay dividends as we always have. And I think that's very important. As for the share buyback, all I would tell you is we'll see. It's obviously in this market, in this situation, it would be kind of foolish to go out and say, yeah, we're going to do a big share buyback program. But clearly, over time, the premise of putting these businesses together, the cash flow generation for both businesses is going to be phenomenal. And we will continue to buy back shares when it's appropriate.
Greg, Jim, always good to see you on the show.
Hey, Jim.
Now, let's say 2 months ago, I would have wanted to buy Carrier. It'd be terrific worldwide, got fantastic business. We always care about energy, climate control. I would have said, Otis, a disaster. It's levered to China. It's almost like it's flipped. As Otis must be online big right now because China's just stimulating and getting back to normal. It may be even exceeding normal in another couple of months. But I don't know. I'm worried about Carrier. There's no business being done in this country right now. Greg, why would I want to own Carrier and when I can own Otis?
Well, I think you can own them both, actually. In fact, what's interesting, Jim, is we looked at the orders. Again, I don't want to get too far ahead of Dave and Judy when they talk about their earnings here in another month or so. But we saw a really solid rebound in China. February, everything shut down. The factory shut down. There was no business. March came back gangbusters in China for both businesses. Some of it was pent-up demand. Some of it was government stimulus. And I think that actually gives us hope that when we get past these next 30 days or so, we start to lift some restrictions, we'll start to see a similar bounce back on the industrial side. As far as Carrier goes, though, keep in mind, right, they've got not just residential air conditioning, they've got commercial air conditioning where they have a service base. They've got a fire and security business. They've got a global refrigeration business. They've got a lot of pieces that are going to actually do.
We seem to have lost Greg Hayes. Let's hope we can get him back, guys, to continue our conversation with him. Of course, Jim, you were mentioning a Carrier and Otis. Certainly he didn't commit to buybacks. We should also mention the market, Carl. We got the S&P down about 0.37% after those unemployment numbers. Kind of a mixed picture right now, seeing plenty of green on my screen. I assume you are as well.
Yeah, and Jim, I can't help but be reminded about your interview with Larry Culp last night on Mad Money. GE, of course, furloughing half of the aviation employees. And amid questions about not just flying, but especially long-haul flying, Jim, what's it going to be like trying to decide whether or not you want to go to another country a year from now?
I have to tell you that I keep coming back to this notion of COVID as the common enemy. COVID is the enemy of the Carrier division. COVID is the enemy of the new great geared turbofan that United Technology has, because if nobody's flying, who cares? COVID is just striking GE in the heart of where you thought that things were great, which is that a magnificent aircraft division. And so you get the $20 billion from Danaher, and now all you're doing is you're plugging the holes again. And the furlough was tough for Larry. Remember, Larry, he's dealt with 2001 and 9/11, 2007, 9. He was a seasoned CEO. But I was calling it a Job time. I mean, no matter what he does, there's always something that just takes him down. But my take is that he's going to get through it. And I like the stock. I do. I like GE right here.
Well, let's get back to Raytheon Technologies and Greg Hayes. I think we've reestablished our connection with you, Greg. We were just talking about GE, which actually leads me to a question here. Yesterday, GE announcing the furlough of 50% of its aviation unit employees. Are you prepared to do a similar furlough for your commercial aviation-related employees?
So obviously, David, we're looking at the demand picture. As Jim was just saying, air travel is down significantly, like 85% in this country in the past month. So we know that there is going to be a reduction in demand, and our folks are already trying to get ahead of it, taking out costs, reducing some spending in engineering, taking CapEx down, all discretionary spending. My first and foremost concern, though, is to keep the workforce intact, because we will get through this. We've lived through 9/11. We've lived through the financial crisis, and we've got a great workforce. And frankly, with the backlog on the defense side, we're working hard today to make sure that we transition work from the commercial aerospace side to the defense side of the business. We're going to transfer engineers. We're going to transfer production workers. we'll see when Boeing and Airbus actually settle out in terms of what that demand looks like. We'll obviously have to make some adjustments, but we're going to try and do it as judiciously as possible with the thought that, well, this might be a 2-year problem. We will get through it. There is another side to this. Commercial aerospace does come back. We've seen it every time. And we want to be positioned to succeed in those markets when it does happen.
Well, on that note, Greg, in preparing, obviously, for having you on, I look back at your January 28th earnings conference call. And like a lot of people, you did not seem to be prepared for what was coming. You were talking about it in terms of potentially the SARS in 2003, impact that had on air travel, talking about the flu and things of that nature. Were you properly prepared for what we're experiencing now? And you just said potentially 2 years. I mean, have we ever really seen anything like this?
Well, and I said this the other day. This is a war, and I don't think many of us saw it coming. I clearly did not see it coming, and that's my bad. But at the same time, the company has lived through it. The senior leadership team has lived through this. We know how to deal with these situations. You go back to 2001, and after September 11th, air traffic plummeted, and it took at least 2 years. It was early 2004, in fact, before we saw levels of passenger traffic back to where we were prior to 9/11. I think it's the same thing in the commercial aerospace side. I think until a vaccine is out there, until people feel safe to fly, we're probably not going to see a robust return. But people want to travel. People want to connect. Human beings are social animals. So it's going to come back. We want to be prepared for it. I missed it. Again, that's my fault. But we were reacting quickly now, and I think we're taking all the right actions.
Well, Greg, you're not alone in that, of course, and we always appreciate your straight talk. And it's good to have you despite these conditions. And congratulations on getting this deal to the finish line. Raytheon Technologies CEO Greg Hayes joining us.
Thank you, gentlemen. Have a great day. Be safe.
You too. You too. Carl, we got an S&P that has turned negative, is negative, but not bad at all after yesterday's fairly strong performance that increased in terms of to the upside as the day went along.
Yeah, we'll talk about oil in a minute, guys, but just to recap, Greg's candor there, Jim, hearing him talk about this as a 2-year issue really fits with what CBO said yesterday, which is 9% unemployment at year-end 2021. Morgan Stanley today saying they don't see a return to economic activity to pre-virus levels until year-end 2021. So, and if you match that with the timeline of a potential vaccine, you're looking at a very long 18 months at least.
It's too long. It's not right. It's too long. We got to do more. We got to unite. We got to solve this thing. We got to get the science guys more involved. We got to start hearing about how these different antivirals are doing. We got to get the FDA, which has been showing new alacrity, getting it so that everybody has a drug. 18 months is too long for our country. We will not be the same country. We'll be a country very rich and then people who are just poor, and there'll be no middle class. That is not a solution. We must not allow that. We must not allow our leaders to take 18 months, and we cannot afford as a great nation to become a mediocre nation, which what would happen if we wait that long. It's all stops. Everyone's got to pull it all stops. Everybody's got to be united, and we can't just have it to be fighting and saying small business not doing good, whatever. It's too long, Carl. It's just too dangerous. Okay. Well, here we've got someone who I think can illuminate the situation. I want to bring in House Speaker Nancy Pelosi. Ms. Speaker, welcome to the show.
Good to be with you. I wish it were under other circumstances.
Yeah, we all do. We all do.
Yes. Well, the numbers are staggering, aren't they?
They're
250,000 cases, 6,000 deaths. So sad.
But it's a common enemy. You united with both sides. I thought that was a monumental piece of legislation.
It was.
And I just think that what's happened is that while it is big, and I know the Secretary of Mnuchin wants it to play out, and I think it's going to work for a while, if these people are right, these people who are supposed to be seers and say it's 18 months, you and I both know that there will be millions of people who are unemployed. What do you suggest we should do? Because that's just too many for this great nation.
Well, it is, and that was predicated on how long it takes to get a vaccine. we have some of the best minds in the country working 24/7, all hands on deck to find a cure or something that can maintain a healthier life until there is a vaccine and the rest. So we can't accept that as an answer. But I do think that we've had 3 bills that have been bipartisan. I think right now we need a 4th bipartisan bill. And I think the bill could be very much like the bill we just passed. I don't think that $350 is enough for small business, and I don't think that 8 weeks is enough of a time to make a judgment about the viability of the business and how long they keep on their employers. So I'd like to go right back and say, let's look at that bill. Let's update it for with some other things that we need. And again, put money in the pockets of the American people. Another direct payment. Extending, we had unemployment at 6 months in our bill. It's 4. Let's take it to 6 for the unemployment so that people have that confidence. Hopefully they don't need it, but they have that confidence. And again, the small business piece, very, very essential. But when these businesses say they survive, they meet the criteria of keeping their employees on, they pay the rent, the utilities and the rest, and then their loan is forgiven, they still need customers. They still need customers. So that's why I think while I'm very much in favor of doing some of the things that we need to do to meet the needs, clean water, more broadband and the rest of that may have to be for a bill beyond this. Right now, I think that we have a good model. It was bipartisan. It was signed by the president, but it's not enough. And again, money in the pockets of America's working families. To remove all doubt that they will have at least some resources. We are a consumer society, so let's have them have the resources to consume.
All right, Madam Speaker, you know me outside. You know I'm a constructive person who wants to get it right and be positive. How about this? We do something that would be rather remarkable, but would be with what Dr. Fauci wants, whom I think as a person is respected from both sides. We do a $1 trillion, 30-year bond, safe and sound. I got the acronym there, SAS. And what we do is we pay people to stay home for 1 month. If we're going to get demand, we got to do what Dr. Fauci says. We pay them to stay home, even if we pay them in scrip. And if they go out, we punch a hole, they don't get the same amount of money. We give them mortgage relief, we give them rent relief, and we give them health care relief. We just do it and put it in their pockets and get this country moving, because we will solve this pandemic by keeping people at home.
Well, you know that other countries are doing, some other countries are doing just that. But the models that we had in that bill was to, again, keep people employed, whether it was in the airline industry, whether it was in small businesses and the rest, keep people on the payroll in order for you to get your loan forgiven. So that it's a path to that. I do hope that but we do need to have more money for state and municipal governments. They're bearing a big price. Hospitals, they're bearing a big price. We just did a down payment for all of that. I would hope that the Fed would use its capabilities, which are now enhanced by our legislation, to ensure that the state and local governments have assistance. They don't need really any more debt. But there has to be a way for them to be helped by our monetary policy as well as our fiscal policy, as we do in our legislation. But I just really think, okay, we have a model. Again, it means people will stay home, and that's the best way to contain this. I do think we have we should have done more right now to protect our workers. And that's something that I know that Dr. Fauci probably speaks about, but I want that to be a louder voice so that the president is not just pitting one state or municipality against the next to get the personal protective equipment that people need so that they can, as they try to save a life, protect their own lives, as well as the ventilators and the rest needed to help people. Because the economy is going to be helped by how we reduce the plague. And the plague, of course, needs a cure, a vaccine, and the rest of that. But in the meantime, we've got to minimize the possible deaths. I don't accept that number. I think we just have to do more to do that. And I think that that's good for the livelihood of the American people as well as their lives. But again, money in the pockets of our consumers. Let's just go back with the same bill with some additions that we know we need in terms of pensions and healthcare cost, and District of Columbia, OSHA to protect our workers, a list that goes on of some things that are just kicked down the road from before, but where we can find agreement and be ready to do that. We did 3 bills. March 4th was one, the 14th another, and the president signed a bill on March 28th complete in just that short period of time. We don't need a long time to figure out what we need to do next. We know, and we have a model.
I know that you are caring about these workers who are on the firing line. It is a tragedy what's happening. Should we not bring back industries that we've outsourced? We've outsourced so much of our health care. Shouldn't we make these drug companies say, listen, you want to get Medicare, you want to get paid by the VA, you start making this stuff here. It's too important. The PPE people, you want to be able to be part of the health society, you make this stuff here, ventilators here. Isn't it time to tell these companies, you bring that employment back here? We are not going to let you continue to outsource and then make it so that we don't even get, our workers don't get the help they need.
Well, it's not only for our workers, it's for our health care. Right now, we're at a very serious disadvantage because much of the supply chain that we need to make the drugs is really in other countries, even or just global companies. They're not all American companies, but there isn't enough that is made here. And so now when we have a global threat, those countries are saying, I'm keeping these drugs here, and we are up the creek. This is a very big issue, and we've been talking about it for a long time. Congresswoman Anna Eshoo of California is the chair of the Health Subcommittee of Energy and Commerce, and she's been on this case for a long time. She really does think there should be a commission to address this issue about how America maintains its independent. When I say independence, its capability to produce drugs for use here or export it where needed, but not to be left up the creek because China or India has the supply side of all of this, in addition to, in some cases, making the drugs themselves. Some of it goes from India to Germany.
Right.
You know the global economy and how there's value added. But we have to be more into that loop, not only from the job side, but from the health security side.
Yeah, sadly, I think that the plagues are not, I like that word plague because it really is front and center about who the common enemy is for Democrats and Republicans. You know, one of the things that I think you care passionately about, I know you like small business, Representative Velasquez, who's in our district, who cares more about small business than anyone I've ever heard, is a genius. She's a genius about small business. I am sure she is worried, as you have to be, that when we come out on the other side, that we'll have just Costco, Walmart, and Amazon. And we'll have McDonald's, Chipotle, and a player to be named later. How do we make it so that we are not a country that just has those guys and no small businesses against them? Now, I know from Secretary Mnuchin that there have been a lot of $400 million already delved out. It's only 930, but we can't have that, right? We can't have it just be those big box stores.
Well, we can't have that, and small business, of course, is the lifeblood of America's economy, where jobs are created and wealth is created as well. And it is someplace where the greatest growth is coming from women and minority-owned businesses, and that's part of the vitality of our economy. So we cannot come down to being reduced to just a few large companies. But that you're right to praise Congresswoman Velasquez. She's been the chair of this committee now for the second time. She's been on the committee a long time. She's been a champion for small business because it is, again, so important to our economy and into the lives of the American people, a sense of community. And that is an economic as well as a personal success for those who are involved in it. I don't think there's anything more ambitious or optimistic that someone can do than to start a small business. Maybe get married, but they probably have weighed the equities there. But in a small business, it's a risk, it's entrepreneurial, people take a chance on that. It's so exciting, and innovation comes from that and the rest, and yet we cannot be reduced to a big shops, big stores. But again, these are decisions, and people have to recognize, as you do, and Nydia does, that these are decisions. It's just an evolution of something. It's a decision to make sure people understand how our economy works, and that consumers are the lifeblood of it all, really, consumers and small businesses. And when they have money in their pockets to consume, that is the best way to grow the economy. And again, that's what we're going to do, money in the pockets of people. Longer period for unemployment insurance so people have that confidence. The PPP, the Paycheck Protection Program, let's have that for longer than 8 weeks. Direct mailing. I've said to the secretary, please let's just transfer these direct payments electronically. Let's not wait until we can get some kind of a fancy mailer to get it out, because that's only going to delay it. And right now, people are have a hope that something is coming. Let's not undermine the enthusiasm they may have for that and the confidence they have that when we say something, that we're going to do it. So I do think that I propose to the administration, to the Republicans, let's do what we just agreed to, except, again, make it more current to again, understand that the business may be open in 8 weeks or 16 weeks, but if they don't have customers, they were just where they were before.
We don't have the demand, but that is because of our common enemy, the plague. And I think a lot of us are so thrilled to see you and Secretary Mnuchin work so well together. That was just a breakthrough. Let me ask you something. Should we just put something out there? We wanted to do that $1 trillion bond, a 30-year. We could use 2%. It would be great. It would be an American war bond against the plague. But would we ever consider doing force majeure on mortgage debt, on how much you pay in your mortgage, on rent? How about force majeure? These healthcare companies, they're charging these small business people $6,000 a month. You hear the horror stories. Yeah. How do we make it so that those are either put in abeyance or the government helps? Because that's what's going to cause individual bankruptcies, and you and I don't want that.
Right. We do have in this bill some forbearance, not enough in my view, but some, and we also have that you cannot evict people for a period of time, not enough in my view. But the larger issue, my city of San Francisco takes from some heat because it comes down on the side of the small business so often about how people shouldn't be evicted and the rest when the economy is not everything we want it to be, and that's for sure now. But this, let me just say, any discussion we may have had about any of these subjects in the past is completely realigned now. We have to make sure that, again, as you keep saying, we're all in this together. How do we make solutions that recognize we're a free market economy, that we don't begrudge anyone their success? However, we don't want it at the exploitation of anyone else either. And again, whether we're talking about, again, our city is a poster child for how obscene the rents are. Almost immoral in terms of that. And so it's very hard to succeed. But in any event, we have new technologies, we have new realities, and we have to make decisions that recognize how we lift everyone up, not just some.
Right. Now, one last question. There's an institution in this country that is revered, and that is the military. They have 125,000 medical professionals. Why do we not have, maybe it's just because we're a little bit older, you and me, mass units all over the country? Why isn't the Fifth Army stationed throughout the U.S.? Why don't we use our unbelievable military to help the just besieged and beleaguered healthcare people? They're ready, they're willing, but they got to be asked.
Well, again, that's a question for the executive branch, but I will say this. I've seen them in operation all over the world in time of disaster and the rest, and aftermaths of war, migrations and the rest, and they are absolutely superb. We think of them only as a defense function, which is, of course, their important purpose, but they also are great in doing other things. Of the people that were, they thought they were retired, that the president may call up, I guess he has called them up, about 11,000 of them are medical professionals, and they may be drawn upon in the need for more healthcare providers. In terms of the Army Corps of Engineers, they're essential as to how we go forward now in that vein. But again, the National Guard, the Reserve, and all the rest, they're being helpful other places as well. Perhaps we can do more, but that would be up to the Commander-in-Chief.
Well, Madam Speaker, thank you so much for coming on. Thank you. I can't represent the country, obviously, I'm just a guy on TV, but it was fabulous that you guys got together and didn't fight, and you had all the phone calls, and we know who the enemy is, Madam Speaker, and it's COVID-19.
But we do have our differences as to their bill was a corporate trickle-down bill. We turned it jiu-jitsu, we turned it upside down to a workers first, bubble up. But then obviously the need was great, and we weighed the equities, and we made some compromises and did the job. Now let's do it again.
Absolutely. Let's crush this thing. Let's just crush it. Madam Speaker, thank you so much. Back to you, Carl.
Great stuff, Jim, with the Speaker. Thank you very much. Bank of America just tweeted a few moments ago, clients can now apply for the federal Paycheck Protection Program. The biggest bank to get up and running today. We'll talk to Brian Moynihan later on this morning on CNBC with the Dow down about 100. Back in a minute.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn. Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
It's super easy. Start banking with Chime today at Chime.com.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
Let's get to Jim and stop trading.
Yeah, look, we got a common theme this morning, obviously, against this plague, and what's going to happen. We want the vaccine 18 months, way too long for our country. So that's why we're relying on antivirals. There's a note this morning from Goldman talking about how maybe Gilead's drug, the remdesivir, that's REMDESIVIR, maybe it's showing some signs of being good. Now, given the fact that the company Goldman doesn't like the company, I thought this was kind of positive. Leading to faster discharge, fewer people in ventilations. That's the first step. That's the Tamiflu that makes it so that this thing isn't lethal. So I regard, look, am I an optimist that the scientists are going to get this, whether it be Gilead or Regeneron? Carl, I am. But I also know I'm a pessimist. If we have to go 18 months, our country can't handle that.
Yeah.
We wait for the data.
Ubiquitous testing, Jim.
Good morning.
Good morning. Hi, Sarah.
Good morning, everyone. I am Sarah Eisen here with Carl Quintanilla. We're just going to reset here, and Jim Cramer and David Faber, we're all coming to you live from 3 separate locations, and check in on the markets because we've seen things actually turn positive just barely here. S&P 500 is up about 0.1%. The Dow still lower by a few points, 47. We're lower for the week, but only by 0.5% for the S&P 500. And the big headline this morning, of course, was that dismal jobs report for the month of March, down 700,000, a lot more than expected, and only just the beginning, because the survey was taken in the middle of March before many parts of this country were shut down. Jim, just as far as the market reaction to the economic data, is there going to be a disconnect here between the bad data and the markets, like many times we've seen post-crisis, where the Fed is all in and making things a little better?
I was on this rap last night. It's a complete jag about this, Sarah. There are two economies. There's the big international economies represented by so many of our companies. And then there's the companies that the hair salons, the restaurants and the barbershops, they don't have stocks. If they had stocks, we'd be shorting the heck out of them. We have a lot of companies where maybe the worst thing that happens is that you'll have a J&J and they won't do as many knee replacements because you can't get into hospital to do that. But we do not have enough stocks that represent small business, with the exception of the restaurants and retailers. Please don't look at those stocks, because you will just see that they lost 70-80% of their value in about 2 weeks. Those are the ones to watch. Otherwise, you got these big international companies that work. They work.
We've got some more economic data actually crossing the tape. ISM services. Let's go to Rick Santelli for the numbers. Rick.
Yes, a surprisingly strong March final read on ISM services. 52.5. It's about 10 points higher than many anticipated. We were looking for 42.43, and it is March final. It did capture a chunk of March, and we could all debate as to what it says or what it doesn't say, but we all know that maybe services will ride this storm out better. But no matter how you slice it, it is better, and the equity markets are improving. Interest rates, well, you know, here we are at 58 basis points in a 10-year note. 54 is the lowest yield close ever. And I still say, don't be too optimistic regarding what the markets are saying until you get a 10-year note much more cushion above its lowest ever yield close. That's at least what I'm focusing on. Jim, back to you.
Oh, thank you so much, Rick. You've been doing an unbelievable job in trying to understand the bond market, and I needed every bit that you give us. All right, why don't we bring in Bank of America CEO Brian Moynihan now. Brian, wow, we're talking to you a lot because you're at the epicenter. Your bank's at the epicenter of trying to get America moving again. Could you tell us whether there are already thousands of people going to Bank of America and saying, listen, I want some of that act. I want that grant. I want that loan. Where are we as of this morning?
Well, Jim, thank you for allowing me to join you again. Just first off, we got to remember this law was not enacted till late in the afternoon last Friday. So a week later, through the hard work of Treasury and all the people there working on this and the hard work of the industry, we are now taking applications. We're about 10,000 applications so far this morning, and my colleagues across the industry, we had a call over this morning, are all getting set up to take those applications. And I think it's a testimony to the speed at which we can move. And so, you know, speed is of the essence here for these types of small businesses. The PPP is meant to keep their payroll consistent, going against some of the discussion you were just having on jobs and other impacts in the economy, which we expect to see in April. And you're seeing the money will start to go out the door once these applications are processed over the next short period of time.
Brian, we've got a common enemy in COVID-19. And I'm wondering, if I went to my bank right now, to my Bank of America branch, and I'm a client, would I find someone? Because you've had to put people in different places just so that they don't get sick. And I know how much you care about your associates, employees. Are there enough people at the bank that I could go in and say, listen, this I want to obtain a paycheck protection program. How do I do it?
Sure. There are teammates, our branches are open. We've kept them consistently open because we're one of the essential industries. Our teammates are being safe in those branches. We're taking great care to make sure they get the social distancing and the cleaning and everything they do, but they're open every day. Just to give an example, I think on Monday or Tuesday this week, you'd have seen $700 million in cash go, $700 million in cash go out over the tele line and through the ATMs. So they're open and functional. Our teammates are there ready to serve. But most importantly, though, the nice thing is the team worked all night last night to get a digital app up. And so this program can be done completely digital.
And right now we're focused on our borrowing clients. And we want, as the Treasury Secretary has said, and the industry has said, we want everybody to go back to their borrowing bank to get the application, because that will be easier to process and be able to process faster. There are certain customers out there who will be eligible for this program and don't borrow. We will process them also. It's just first we have to focus on the borrowing clients to make sure we can take care of them, because that is a core relationship bank. If you think of all the 4,000 banks in America and all the clients that are eligible for this, if they go back to their relationship bank, it'll be easier to get them through the process faster. And then we'll deal. Then secondly, with those people who have the core relationship but don't borrow, we'll handle them also.
All right, I think it's important to point out your app is the most popular of all the bank's apps, and that is unbelievable that you got it already up. So, and it's not just a millennial app. I think there's a huge number of people who use it. How simple is that? I mean, is that just does it explain everything? Because Brian, I mean, I had to hire someone to understand exactly what I could get from my businesses. Is the app more? Is it explicit?
Yeah, the app the core banking app. We stood up a new piece, obviously, because this is a new program. And literally, it's less than a week old, and the regulation just came out last night. So the team has done a spectacular job getting it ready. And so it explains the process. It takes the application. We're trying to make sure it's all fully operational behind the scenes, and that takes a little more work. We're continuing to work on. But if the customer goes in, they can find the app, and then our business customers can go into their what we call Cash Pro, which is their online app, and they can see a button and press on it and get to the application period. It is within the broadbankofamerica.com, and so the people on the mobile apps and stuff have other access.
Brian, where are we right now? When do you think we'll be open for business? You're in touch with more businesses and individuals than pretty much anyone in the country. And I know you and I are both concerned that the enemy that is COVID has got us on the run right now. When do you think we'll get it on the run?
Well, I think as we saw during the month of March, and you were talking about it, the impact to all the types of business, restaurants and the hairdressers and doctors who are not involved in directly in the fight here, shutting down their offices, the orders by 95% of the population. March was really different each week. And from the beginning of March to the end of March, the amount of money that flowed through the company by our consumers went from around $60 billion a week to about mid-40s billion dollars a week, and that can bounce around depending on how the week runs and where it is in the monthly cycle. But you saw it slow down. So the real question is, how fast can we get those parts of the economy restarted? And that's going to come by getting comfort about the testing and the understanding of disease, all the things you were talking about earlier. That is still ahead of us. Obviously, the president issued an order that we're in through the end of April, and I think it's going to be a while. But right now, the economy seems to be settling into a level that we'll have to judge that we can start to see emerge. We don't know where we'll be yet, and we'll keep you posted over the next few weeks. But to get the rest of that $20 billion a week of payments restarted, you're going to need to see activities open up again, and that means winning the war on the virus.
Brian, what do we say to the prospect of get to the point where the country's just losing too many jobs, and politicians say, you know what, it is time for mortgage forbearance. We don't have to pay our mortgage. It's time for rent forbearance. What happens? Because there are contracts in our country that made it so that we are easy to get a mortgage, because mortgages are sacrosanct and ironclad. You have to pay. Student loans. What happens if people in Washington say, you know what, Brian, you're not allowed to, you tell your servicers they can't get that money this month. Sorry. What happens to Bank of America?
Well, look, right now we've helped nearly 500,000 customers defer their payments. And what we mean by that is for our mortgage customers that have their mortgage with us, we just tack it on the end. So if it's 28 years left on your mortgage, somewhere out there 28 years from now, if you don't move, you don't pay off your mortgage or something else doesn't go on, you'll have to make up the 3 payments that you made up in the summer here. So I think the idea is to defer the payment, defer the impact. But the real key of the CARES Act and this PPP and the different provisions and the unemployment provisions and even the cash provisions is to keep money in the hands of people so they can maintain themselves in the broadest context in terms of living, but also continue to pay their bills. And the other question is, I think, incumbent upon employers like us is keep the people employed, keep paying them, and they should be able to pay their bills. And I think we have to remember that even though I gave you 500,000, we have 66 million customers. So there are a lot of customers who are going to be able to pay their bills, and even in our mortgages, 30,000 customers or so requested relief out of the hundreds of thousands we have. So you're not going to see. A lot of people are getting paid. You saw that services economy. They're still working, and they should pay their bills. Would be my advice to the people going to not only the policy question, but also just the fiscal management question. So we're working with our customers that need help, who are losing their jobs. We have to preserve their ability to have cash flow, and that's what the CARES Act did. That's what this PPP does, and we're doing our best to help.
Let's say I'm a small business, and I say, you know what? This Bank of America is a pretty good bank. I'm going to go in there. I'm going to set up an account. I'm going to get my money through them. Are you ready to do that? Some say that it's really for existing Bank of America accounts. You can't go in there, open an account today, and get things done.
Yeah, we are prioritizing. We have 1 million borrowing customers we're trying to get through the system first. Then our second priority will be the customers who have a core operating account with us but don't borrow anywhere. For those that borrow from the other 4,000 banks in the country, we're trying to get them to go back to their bank, which is the priority that the Treasury put on it, because A, the process is faster, and B, it spreads the work out and the obligation and will make the whole system go faster. If everybody shows up at Bank A or Bank B or Bank C, that means it's going to slow down the process. So my advice to customers is, if you borrow from us, you can apply on the application. If you have all your relationship with us but don't borrow, the relationship managers will handle that. But if you borrow with another bank, and when I talk to my colleagues in the industry, all the same belief, please go back and work with them, because they're core bank. I know you're the best and process you the fastest.
All right, Brian, the last question. We're all trying to get united. We all feel the same. We all actually know people now at this point who have died from it. I have lots of friends who know people who have died from it. Bank of America has been unique in the amount of charity that you've done, and the amount of money that you devoted, and the fact that you're keeping people on the job. Just speak to what you got. You're a very humble man. I'm going to put you on the spot. I know you don't like to do this. Speak to some of the stuff you're doing, because I think people have to know that business is the greatest source of change in this country.
Well, I think number one, you mentioned earlier, we've come at this on a customer-centric and team-centric view. We're trying to do everything we can to take care of the limited number of teammates that we have that actually have the disease, or a family member has a disease, and make sure they're getting the best medical help. We continue to work, like in our trading operations, only 5% of the people in the trading operations are actually at work. 95% of people trading from home. The team has done a fantastic job at deploying over 150,000 work from home positions. So we're complying with a social separation. But if you think more broadly, we did $100 million of charitable giving. We're implementing that through our 92 market presidents. We've maintained our employment. We already announced that as of last month, we went to $20 an hour minimum wage for everybody in our company.